All right. So, yo, what's up for y'all on the replay? I hope you're having a great day. I'm going to be starting off the stream showing you a bunch of stocks that I think are worth buying right now. And that's tough to say because if we look at the stock market, it's at all-time highs right now. The S&P 500 or the SPY ETF is literally at an all-time high right now. So, what is really attractive to buy in this environment? Because it seems like tech is hard to buy, but there are still some good deals out there. And I made a small watch list here of stocks that I think are worth buying at their current prices. To start it off, obviously, Microsoft, the behemoth at a 28 forward PE. I think Microsoft is even worth buying and nibbling at current prices. I mean, you just can't make up the net income they make. It's just up and to the right every year. Big cloud play. I mean, AI toolkit of the future. So, yeah, Microsoft's one stock I think is obviously worth buying right now. If you're looking for a bit of a higher yielding one, check out ticker symbol SO. I also just bought this one for the first time ever. I bought 11 shares of them, and the dividend yield's really good. Check this out in the middle. They have a 3.4% dividend yield. In my opinion, you'll get 3.4% of your money back in dividends, and then around 3% in stock price appreciation for around a 7% total return every single year with this company right here. Probably not going to outperform the super tech heavy S&P 500 in the long run since this is a utility, but these always just give you for eternity around 7% of your money back total return a year. That one I think is worth buying right now. And here's another great one. This is ticker symbol PGR Progressive. You can see my cost basis. I got 4 shares at $247 a share. So we are down a little bit on our Progressive position, but this one is another great one. I actually want to do some analysis on Progressive stock. Then we'll get into some of y'all's companies. And I also want to do a portfolio update because my portfolio is at a crazy new all-time high as well. So here's Progressive. Check out the PE. It's an 11.8. So that's a pretty fair valuation. That's kind of normally what these insurance companies trade at. So yeah, they traded a 12.7 forward PE. And the fundamentals are just up and to the right. Check out their personal lines. This is an insurance company. Obviously, it's 82% of the total revenue. It just keeps bumping up. Check this out. It's up 16% year over year after it grew 35, after it grew 23, after it grew 6%. So they're just on a streak of growth, years of streaks of growth. I mean, yeah, there is no decline. So that's at a record. All their businesses are at a record. And check out their bottom line. They're easily making $2.5 to $3 billion of after-tax net income a quarter. That's why I think Progressive is a great company. They make so much money that they're doing these special dividends. They just did a $13 special dividend. So yeah, Progressive's a beast they have high growth. You get a 12 PE on this company, 12 forward PE, and you get a nice dividend yield. And yeah, they just did a special dividend. Let me share with you. So normally they only pay you 10 cents a quarter, but every January, they did this last January as well, basically every Christmas time. That's when it ex-dividend dates, but you get paid in January. They did a $4.50 special dividend, and this year it was a $13.50 special dividend. And of course, they can easily afford that with their EPS. I mean, check this out right here. They're doing $4 to $5 plus of EPS a quarter. So that's why I think Progressive is pretty cool if you're looking for a stock to buy that's, a little bit off all-time highs. Great company, in my opinion. We have another one, ARM, right here. Hey, what up, Deborah, Clem? Good to see y'all. Hope y'all having a great day. I know y'all probably are because the market's been on fire, but check out ARM. This is a bit of an AI play. They don't pay a dividend, and they're really expensive, but they certainly deserve a high multiple because this company is an absolute fortress. I guess this brokerage is telling me that there's a bullish continuation wedge. Rise probability is at 95% or something. But anyway, what's cool about ARM is a lot of people don't know this, but they're really a royalty and licensing company. Check this out. This company, 62% of the revenue for ARM is their royalty revenue. Literally high margin royalties. If we go to the gross margin, you won't believe it. 98% gross margins. I mean, that's a Reddit type gross margin. That's phenomenal. Takes nothing to run the company and it's all high margin because you're collecting royalties and licensing and other revenue. US is 42% of the revenue. Then China's around 18%. It's a chip play. Everyone around the world's buying their chips, like Taiwan as well. And check out the forecast. It's just up and to the right. They beat great this quarter. Analysts expected 1.06. They did 1.13, and the revenue is supposed to hit 1.43 as well. EPS is up and to the right as well. So yeah, they make great net income every quarter. They're just really expensive. like really expensive at 101 times forward net income. That's expensive, but they certainly deserve a high multiple because those margins you can't make up. All right. Hey, what up, y'all? Good to see y'all. Hope y'all having a great day. So yeah, that was kind of my list of stocks. I actually did want to go over. Actually, there is one more. Ooh, this is an interesting one. I think you guys will like. It has the fundamentals of a stock that I think are great. Potentially put it on your watch list. This is the sticker symbol TW Trade Web. You won't believe how great their financials are. Completely debt free, unleveraged company. Like absolute monster balance sheet. Check this out right here. They literally have. Let's see, $2 billion of cash on hand. I'm guessing that's earning them interest as well. Let's see here. Yeah, that $2 billion of cash made them 19 million in just interest on their cash. If this number was negative, that means, they have debt and they're paying interest on their debt net, but they have so much cash that they're putting their cash in the 1 to 3 week treasury bills and they make 15 to 20 mil of just interest on their cash a quarter. But that's not even the best part. Check out the revenue. The revenue grew 13%. So the revenue's up 13, but the net income is up by 61. What does that mean in English? That means margin expansions. Their net margin, this is already crazy. They already had a 30% net margin, but they grew it to a 41% net margin. And this is real net income. They made 210 million of net income. That's phenomenal. Hey, yo, no way, Xylan with the huge gift of Paper Crane. Yo, I really appreciate that, dude. If you got a stock you want me to look at, let me know there. I do appreciate that, man. Thanks, Xylan. But yeah, this company has 35-40% net margins, gross margins grew as well. The free cash flow is great. The year-over-year comps, I mean, everything here is headed in the right direction. They're another just a really nice growth name that I like. Look at these expectations. Revenue is going to go from 507 million to 569 in 2 quarters. EPS, like they had a huge beat on EPS this quarter. That's why they're expensive. Actually, not really at a 30 PE. I'm going to re-add this one to the top of my watch list because with that unleveraged balance sheet, actually around 8% of the market cap is their net cash on hand. So yeah, hopefully that was a useful pick there. Ticker symbol TW. I don't own them. Jimbo, what's up, man? He says, I'm heavily invested in Google, NVIDIA, Shopify. We want to diversify. Yo, I diversify in an ETF, and those are some great names. I'm jealous you own Spotify. That one's been a great one. And hey, Tacos, what's up, Tacos? He says, Oscar, this is one of your Medicare, Medicaid places, but they're not profitable yet. Hey, what up, Plasma? Will my Duolingo recover? Let's look at Duolingo after this, too. That's a great one. So anyway, here's Oscar Health right here. Let's see. What I love about them is their top line growth. I mean, they're taking market share. Look at this annual revenue growth. I mean, in 2020, it was 590 million, and it's just up and to the right. 590 million for that full year. Now, just this quarter, they did 2.99 bill. I mean, these year-over-year growth is phenomenal on the top line, but they're still struggling with their bottom line. They're not net making any money yet, but whenever they do, that'll be a great inflection point. And a lot of this, noise, like they're falling with UNH on certain things, but notice like they're kind of flat from a year and a half ago when UNH is down like 30%. So they've been definitely more resilient. I do love their top line growth and the expectations are up and to the right as well. But yeah, they're still struggling. They may have that one quarter and it's actually the profits are going to go down. So you're really watching the bottom line, the net income here. But nice top line growth there. Okay, yeah, let's look at Duolingo. This is a great one, but there's a bit of a thesis change happening right now. Like, Duolingo is an app you go to learn a new language or learn a language, and maybe in 10 years from now, there will be no point in needing to learn a new language if, like, your Meta Ray-Bans has the technology to just convert live translations and stuff like that. There's also increased competition right now, like OpenAI has their own language learning software, and Google's making one. So that's why I think this stock has had such a collapse. Like, in the sad part is they're not exactly cheap even after this dip. That's the rough part on Duolingo. The forward PE is a 40, but I think Duolingo certainly deserves a 40 forward PE. I think it might be worth nibbling on, but I wouldn't go crazy big in Duolingo yet because they're not super cheap. But here's why they certainly deserve a high multiple. This growth is insane. This is a subscription model company. 85% of the revenue is that, and the growth in the middle is unbelievable. That's why Duolingo is still interesting. Like there's all this like AI thesis hurting them, but it hasn't hurt their numbers yet. Like their business is booming. Subscription revenue's up every quarter in the middle here. It's just all green. It's 40 to 50% every quarter year over year. I can't believe it. And if you don't pay for their subscription, you see ads. So if we go to their advertising revenue, that's up 45% year over year. That's also seeing great growth. The business, every metric is beating on all expectations. They beat on revenue, they beat on net income, they beat on EBITDA, they're beating on every metric. They had a one-time adjustment this quarter. They didn't actually make 292 million, but they did have a record profitability quarter. You can see that from the operating profit. But yeah, that's why I wouldn't sell out of this one, but I wouldn't add any new money to it. Maybe nibble, but I'd wait until because I'm scared. I'm scared like this forward the PE forward PE is a 40. I feel like it could maybe go to like a 33 or or I don't know. That's the risk there. So there's some good and bad, great fundamentals. You behind the Discord IPO this year, that'd be interesting. I'd have to look at their numbers. Oh, if they're like a Reddit, then yeah, I love Reddit stock. Arista Networks. Yo, sorry if I'm a little behind on the chat here. I do want to get to all these stocks. We just started the stream. We're going to be live easily for another hour. So for sure. What's this app? Yeah, hey, this is a brokerage. If you want to get this app I'm on, it's actually in the link tree in my bio, very first link there. The app where you buy stocks on. It's an affiliate link, full disclosure. So here's Arista Networks. This one or this brokerage is telling me right here that there is a bearish flag forming, whatever that is. Anyway, let's go judge the company off their fundamentals. Now they're at a 41 forward PE, but I remember this company certainly deserves a high multiple. This is the same kind of forward PE as Duolingo. And let's go look at their fundamentals. So first off, they've been beating on every expectation. That's the orange line. That's why they're gapping up on earnings day. They beat on revenue, they beat on EPS, and they beat on EBIT. So triple beat quarters around the block. And the bottom line is just insane here. This is their after-tax net income. This is after they pay over 100 mil of taxes every quarter. They're easily making 800 million to 900 million of after-tax net income a quarter, and they have a fortress balance sheet. Same with the free cash flow. The free cash flow, this is what FCF stands for. They're doing over $1 billion of free cash flow a quarter. So I just really like what I see here. They like when you make 900 mil of after-tax net income a quarter, you don't really have debt to pay. I mean, you can just do whatever you want. You can reinvest in the business, and I don't think they pay a dividend. Yeah, they don't pay a dividend, so they can just buy a bunch of companies if they wanted to. I actually want to pull that up. Yeah, and they are. I love this. They're spending around the 600 mil to $1 billion a quarter buying new companies, buying new assets. So, yeah, that's Arista Networks. I love this company. It might be a slight bit expensive still at a 41 forward PE, but this is another growth company where it's just like they deserve that high multiple. They're great. Oh, hey, yeah, Desmond. He said BTBT. Yeah, I saw that one. Let me get to this one. Bit Digital. This might be like oh, hey, Ishwar. What's up, man? Good to see you. Hope you're having a good day. And Zylan said, bro, I bought one every stock I could think of. Is this a good strategy or am I yellowing? You don't want to be too diversified, Zylan. Yeah, after like 30 stocks, the bell curve of diversification, you're just not diversifying anymore after that 30th stock or anything meaningful. Hey, what up, Caden? Yeah, I saw multiple people say Chevron. We'll get to Chevron too. So here's Bit Digital. I think this is just a Bitcoin mining company. The market cap is 700 mil. And I really never would recommend, actually, the Bitcoin mining companies never actually outperform Bitcoin. Bitcoin's always the better buy, but look at what they're doing. It looks like they've converted from digital asset mining to their main source is cloud services because right now GPUs are in such demand, not from Bitcoin mining, but from cloud hosting. Think of CoreWeave, Nebius, and they're trying to become basically that. This company just owns a bunch of NVIDIA chips and they're converting it from just mining Bitcoin solely to now some cloud services where they can rent out the capacity, but they still mine some assets. I guess Ethereum staking. How's that doing? I guess they made 3 million. Anyway, they have a great balance sheet. Look at that. I wonder if you do like you see how much crypto they own and see what their NAV value is versus their market cap. Anyway, it's an interesting one, but nothing super blowing me away here. Nothing really proprietary. Honestly, it's not the worst because they have a fortress balance sheet. So I guess you just value them based off their net asset value of the crypto. Okay, and I saw Chevron. Let me do Chevron. You know who owns Chevron? The homie Warren Buffett. You know, Buffett owns a lot of great names, a lot of dividend names, and Chevron is a great oil and gas play. You're not buying Chevron to outperform the tech-heavy S&P. The stock will never outperform the S&P, but you buy this as a small portion of your portfolio for the diversification into oil, because whenever there's inflation fears, war fears, or random war stuff like what just happened in Venezuela, oil spikes. And in the meantime, while you're waiting for those catalysts, you just collect a 4.2% qualified dividend in the meantime that slowly raises. So every year you're getting a little bit more. So you basically just get 4% of your money back in dividends, and then you hope for like 3 to 4% stock price appreciation. So yeah, you can't go wrong with Chevron. 26 forward PE. Yeah, nice oil and gas play. ExxonMobil is a great one as well. ExxonMobil, I actually slightly like more than them. Hey, what up, Front Street? I appreciate that. George, what's up? He said VST Vistra. I think this is your yeah, this is one of your nuclear plays. So clean energy plays, kind of like a Constellation Energy. I think there was just a big deal with Meta. Yeah, check this out. Vistra Energy signs a 20-year nuclear power agreement with Meta. So that's pretty cool. And that's, wait, what did it say? The deal is expected to generate incremental adjusted free cash flow and support Vistra's mid-team leverage return target. So nice. Let's go check out the valuation on this one. That's a pretty cheap valuation. So in terms of a forward PE, look at their current PE. If you look at their current PE, you're like, this is super expensive, a 59 PE. But when we look at the forward PE, which we'll look at those expectations, it's a 16. Now that's a pretty cheap valuation, actually. Let's see what these EPS expectations are. Okay, so yeah, that's starting to make more sense. It looks like 2 quarters ago, they lost 93 cents of EPS when they were expected to make 67. So that's hurting their current PE ratio. And the expectations are it's going to go from 67, if they did that, to $1.26. So yeah, they're really probably, they're doing on average like $1.50 to $2 or EPS a quarter. Yeah, they're really at like 17 times next year's net income. Yeah, I'm assuming this quarter right here where they lost net income was some sort of one-time adjustment. Maybe we can check that on the EBIT. So they are slightly missing. Yeah, they did. Wow, look at that. So they did miss on revenue. They expected 6.17. They only did 4.97. So they're missing on expectations. Anyway, that's an interesting one. They're like the second best nuclear play in my opinion. The number one nuclear play would be CEG, Constellation Energy. They own 31 reactors. Vistra Energy owns around 5 reactors, nuclear reactors. They're the second best. Hopefully that was helpful there. Can Axon grow at least? Axon's such a cool play. This is a body camera play, and police stations around the world are like mandating body cams, and Axon's the company that makes these. The whole UK police force uses them. A lot of US police forces used all the Axon software, the Axon body cams, the Axon cloud to store it all. They make tasers as well. So I love this company. I love it, but they're really struggling with profitability. They technically, the core business has lost money every quarter for the past 4 quarters. They have no profits yet, but the top line's growing like crazy. So this is really a long-term play. They're super expensive. So if we look at them on a forward PE, a 505 forward PE. So that's not great, but the revenue is just up and to the right. And we can see the connected devices, that's just up and to the right. Software and services is up 41% year over year. They're the number one drone defense play in the world by far. With D-Drone, it was one of their best acquisitions they've ever done. Axon's a great one, but you got to be real patient. They're going up on the whole warfare news. But anyway, yeah, Axon's one I love, but you can't have it as a big size position yet because they're super expensive. Which app are you using? Oh, hey, this is actually a brokerage right here where you buy stocks on. If you wanted to get it, it's actually in the link tree in my bio, very first link there, broker called Moomoo. Yeah, my favorite app to buy stocks and analyze stocks. It is an affiliate link, full disclosure. So if you go and deposit $100, they'll both get like a little free stock. So VRT may join the S&P 500 this year. Yeah, they probably will. I'm almost certain Reddit is going to join the S&P 500 this year. That's one I do own. Someone said, what were the stocks you recommend? Yeah, if you go to the beginning of the stream, you'll see my main analysis on these. But right now, we were just saying the S&P 500 at all-time highs right now. What stocks are worth really looking into? I think Progressive, Southern Company, Microsoft, TradeWeb, basically all the first 6 stocks here. Lightpath is a micro cap I'm considering buying. Let's go over this one real quick. This is LPTH. They're only worth 650 million. And no, even though they're at like an all-time high, I think there's still more upside room, even though they're only worth $657 million. Let me actually go over this one. LPTH. Or maybe you could put it on the watch list. And sorry if Neo's not a great one. They lose too much money. Lightpath, this is, they're worth $650 million. They're not profitable yet, but if we go to their revenue right here, it's been great. Up 80% year over year. They're basically finally making some revenue. The expectations are up and to the right as well, and they had a massive beat on revenue this quarter. And the good news is they're barely losing any net income, like 2 to 7 million. It's still a lot for their market cap, but I like that it's only 2 million. So we do want to see them narrow their losses. But anyway, it's just an interesting one that seems, infrared components, all their businesses are growing right now. So, look at their assembly and module revenue. That's up to a record. So anyway, it's just a small growth name that I think is interesting. Should we look at Neo? Maybe, should we? So they won't have anything good to say about that one. Celerate said, started a new position in ZENA. What's this one? Xena Tech right here. Taiwan Semi. I love that one. TPO. That's a nice one too. That's a royalty stock as well, like ARM. So this one's 160 million market cap, very small company. You got to be careful with these, but look at that. It's a drone play, drones as a service. Well, check out the expectations. It's going to, again, very small market cap, but very small numbers. That's why the revenue is supposed to go to 6.9 mil. I mean, you annualize that, that's like 30 mil of revenue a year. Whoa, yeah. As long as they keep up this top line growth, again, it's still so small. So it's easy to have these triple digit growth rates. But as long as they can keep up this growth, the losses are worsening. But they're probably able to issue a lot of, they bought something. Look at their cash from investing activities. They spent 15 mil on something. That's great. That's a big chunk of their market cap. That'll probably lead to even more growth. But they're also diluting you by a lot. They diluted you by 24 million this quarter. But anyway, it's an interesting one. I keep it as a small position. Looks like they have a small software business as well. If these expectations are right, that's great. That's an interesting little small drone play. Let's do Taiwan Semi right here. If you're looking for a chip play, this is one of my favorite ones out there. And they're not even super expensive. Hey, Josh, dude, thanks for that gift there. A billboard. I appreciate those roses. So here's Taiwan Semi. If we look at the forward multiple on this one, this is why the valuations aren't too nuts right now. The forward PE is a 27. And for the growth that this company has, they deserve a higher forward PE than a 27. I think this can stretch up still to a 30 forward PE. Even though the stock's at all-time highs, I still think there's more upside potential. If I was a shareholder, I would not be selling or trimming the stock. Yeah, they make these small nanometer, like 3 nanometer wafer chips, and their market share just continues to climb higher and higher. And check out the revenue. So the total revenue is 32 billion, up 35%, but the revenue's 32 bill. And on that, they netted, after paying taxes, 14.8 billion. So their net margin is a 45%. They grew their net margin as well, 7%. And this is in US dollars as well. I just can't believe how profitable they are. You also get a good yield, a 1% dividend. They raise it a lot every year, way faster than inflation. So this is the company, and this is part of NVIDIA's moat that NVIDIA has it exclusively to them, basically. They have a massive backlog, but NVIDIA just designs the chips. Taiwan Semi is the one that actually manufactures them. And there's so many people going to Taiwan Semi saying, hey, can we produce our chip here, please? And they're like, no, sorry, we can't. So Taiwan Semi capacity forecast, raises forecasts amid growing AI demand. I kind of want to read that, but my Wi-Fi is giving me troubles right now. I do apologize if there's a little bit of lag. By the way, if you wanted the follow button, we stream every day. I sell nothing. I have no course book. I don't coach. Literally sell nothing. So 130,000 wafers by end of 20. You know what? Well. Anyway, Taiwan Semi's a phenomenal name. You just buy and never sell. I wouldn't even trim that one if I own them. Hey, thanks again, Josh, for the gift there here. He said IoT. This is Sam Sarah. Let's do this one. And hey, what up, Johnny says MPC. Let's do MPC as well. And will SoFi hit 40? I love SoFi. Jerome said best NASDAQ ETF. That would be the QQQM. It's the lowest expense ratio way to get exposure to just the basic NASDAQ 100 ETF. A lot of people know QQQ, but if you buy QQQM, it's a lower fee. What app you using? Yeah, hey, if you this is actually a brokerage right here where you buy stocks on. If you want to get this app, it's in the link tree in my bio, very first link there. So here's Sam Sarah. There's no forward PE, so they're not going to be profitable anytime soon. Maybe that's why the stock has been flat for over a year. But let's see what the fundamentals are. So the revenue expectations are great. It's just up and to the right. They always beat on revenue every quarter, and they're beating on EPS. So analysts expect them to lose money, but they're losing less money than expected, which is phenomenal. And on EBIT, so they've been massively triple beating on every quarter, but the stock just can't get up. Why is that? Where does the revenue come from? So 86% of the revenue is the U.S. They got profitable for the first time ever this quarter. So sales are growing nicely, up 30% after 35, after 39. So honestly, I don't see anything wrong with this company besides the fact that it might be, extremely expensive because they're just not EPS positive yet. So it's hard to, basically got to do a 3 or 4 year out EPS multiple to, yeah, but they're beating on expectations every quarter. Analysts they keep beating on expectations. Honestly, it's probably worth to nibble on this one. I would have to do a little bit more research on this one just because they're so far away from sustained profits. But I like everything I'm seeing there, and they're beating on every expectation every quarter. So Pit Pat said P&G. Hey, sorry if I don't get to all the stocks. I do try, and there's just so many stocks I just can't get to all of them. But Kraken Robotics. Yeah, this is one of the better robotics plays. They're out of Canada, so I can't buy this one. Let's convert the currency to USD just to get a better idea here. So let's see their products revenue. That's up 16, or this is on the full year. Let's go down here. So it looks like they did miss on revenue this quarter, but next quarter is supposed to be 35 million of revenue. What is it right now? That's going to be a record revenue if that's right. 35 mil of revenue within 30 mil. So there's a lot of growth expected. And I think they're net income positive. Yeah, that's what I remember. Like they're already running the business at a profit. You see a lot of these other robotics names, like I think like Symbiotics still lose some money, obviously, but like a Rich Tech Robotics and what's the other one that partners with DoorDash? I don't remember, but this one's already running at a profit, which is just adds safety. Good balance sheet as well. Actually, is that from dilution? So yeah, they just diluted you by 80 mil, but their balance sheet was fortified, or looks like they bought something for 20 mil as well. Anyway, it's a nice robotics, but I haven't done too much research on this one. But Canadian. Maybe you can check out their website right here, Kraken Robotics. Oh my gosh, no, reject all cookies. Transforming subsea intelligence. Maybe it's like an underwater robotics play or something, because it's like a Kraken, they call it. I like their logo on the top left. Sea power batteries, LiDAR solutions, sub-bottom imaging, acoustic coring. So there you go. That's what P&G is. Hey, try not to spam in the chat here. My bad. I am behind. I have like a backlog of stocks I got to get to, so I do apologize here. I appreciate everyone. I'm reading the YouTube and the TikTok stream. Don't worry. I have not done new scale yet. Yeah, if you have a stock, give me the ticker symbol because I don't know what Cipher Mining is. Yeah, give me the ticker symbol and we can check these out. So here's Marathon Petroleum. This is a $52 billion company. They're a cheap company, a 10 forward PE. That's normal for these commodity stocks, but Marathon Petroleum, 10 forward PE. That's very cheap. So refining and marketing, obviously it follows the commodity of just oil and gas, but look at that beat this quarter. That's probably why if we look at this one, like compared to the average oil and gas stock, this one's really done great and better than a lot. It's actually done better than Chevron and Exxon. That's a great beat on revenue this quarter. A great beat on EPS. They expected 317. They did 450. And on EBIT, wow, this quarter was a phenomenal beat. So the revenue declined 0.85, but the net income grew by 91, and that was real. Or yeah, the profits really did rise by 50. So they're beating expectations like crazy. So yeah, this is Marathon Petroleum. I actually own. I thought of Murphy USA. I think they used to own them. Um, so yeah. Anyway, that one's a nice one. What was their dividend? MPC. Yeah, that's a nice play. Let me check out their dividend right here. Petroleum play, maybe like a competitor to Oxy. Yeah, and you get a 2% dividend. You get a 2.07% dividend, 33% payout ratio. Very safe. So yeah, nice. Um, okay. All right. Top stocks for 2026. Hey, that's kind of what we went over at the beginning of the stream. These are ones like if we just look at the SPY right now, the S&P 500, all-time high, literally on Friday, all-time high. So what is really attractive to buy? Because, it's tough to buy that at all-time highs. But here were some of the picks that I think. I think Microsoft is a great company to get into if you don't already. That'll easily give you 8-10% of your money back a year. TradeWeb, I thought was an interesting one. We did a full analysis on this one at the beginning. Southern Company is a bit of a higher yielding name, a 3.4% dividend yield, regulated utility. Domino's Pizza looks interesting. I like their franchise model. They're kind of not doing great on their international expansion right now, but Progressive, a great insurance company doing special dividends. Finally on a dip, you get a like 2% dividend with that one. ARM as well. So yeah, you know what? I just realized, hey, watch out for that person in chat there scamming. Let me report that person, and I can actually get him fully banned off TikTok because I have a guy now. Yes, let me copy his username real quick. But yeah, watch out for people impersonating me and stuff. Well, that guy wasn't impersonating me, but the scammers. I'll never follow you, DM you. I don't sell anything. No course book, WhatsApp. So okay. Um, Let's see. Hey, B Mills, good to see you there. I am a little behind here, so remind me to get to Cloudflare a little later. Hey, what up, Ishwar? He says ONDS. This is a bit of a micro cap that I've seen gaining a lot of traction. I wouldn't buy it at its current price. Like the risk to reward at buying it now isn't great, but the fundamentals explain why this one is going up so much. Like they really do deserve to have some crazy stock price appreciation because they have great expectations. They had great guidance. Literally, like their right now revenue is 4 million. Now it's 10 million this quarter. That beat expectations. That's the orange line. Analysts expected 7 mil. They did 10 million. But check out the expectation in 2 quarters. It's supposed to be $25 million. And if you annualize that, that's 100 million of annual revenue. You're basically the long-term outlook on this one is great, but it's like kind of already priced in at this point. I think the risk reward is tough to really buy it at their current price. But if I was a shareholder here, I really probably wouldn't trim or sell because I just hold this for the next 6 months as they beat these earnings reports. If they 30% beat on this one, if they beat on this 17 mil and beat on the 25 mil and do like 30, 40 mil, like there could still be even more upside. So it's an interesting one you could put on your watch list. I think this is some Ondas Autonomous Systems Robotics company. We can just see their revenues kind of been up and to the right. And it's 10 mil this quarter, already record, and it's supposed to be 25 mil. And so that's kind of why that one's interesting. Probably wouldn't buy too much of it. Okay. What was the other one I wanted to look at? Hey, what up? Let's see here. Takes on meme coins. Yeah, hey, I don't actually own any crypto. I would be careful with crypto. Yo, shout out to the member Brian Paul. I bought some MPC earlier this week and a couple other heavy crude oil refineries. Hey, nice. We just did a deep dive on MPC. The oil commodity stocks have been booming. So yeah, that's great. ALPD. Let me know if you're talking about APLD. I think you mean APLD. That's the company owned by NVIDIA. Yeah. Hey, Matthew, try not to spam there. Oh, no. He says RZLV. I think this is some kind of AI software name. They're worth $1 billion. Let's see if there's any sort of news around this company. No news. Do they have revenue right now? So Are they headquartered in the US? Because they don't report quarterly. Yeah, they're headquartered in London. They have 50 employees. I guess we do get expectations. Let's hope these are right, but they don't report quarterly. Really leveraged the balance sheet, but did they just like, yeah, they've been diluting. I don't know about this one. I guess here's what we can see. I guess the expectations are like 20 mil of revenue. I guess the expectations are up and to the right, but I don't. This is a weird one, just because I don't. They're in the UK. I'd be careful. I wish I could give you more thoughts on them. That probably was kind of not too helpful there. What's this app right here? Okay, that's actually a brokerage, a software where you buy stocks on. If you wanted to get it, it's in the link tree in my bio, very first link there. It's a broker called Moomoo. Um, yeah. Boeing stock, I don't love Boeing because they just can't get profitable. But the aerospace and defense stocks have been kind of going up recently. Boeing Max faces engine dicing issues. Alaska Airlines places record order for 110 Boeing aircrafts worth over $10 billion. Boeing benefits from Trump's proposed 1.5 trillion military budget increase. So I guess these are some of the good points that are leading to the sentiment to go higher. What just scares me though about this one is the net income losses here. So and this isn't some like one-time adjustments either. These are real. Like they lost 5 bill this quarter, 600 mil. And we scroll back to the previous year, they just lost billions for that whole entire year too. And we're now in 2023. There's not a single quarter of net income positive. We're back in 2022, 2021. It's just an industry where they just can't make any actual profits, and they're already super leveraged. They have more liabilities than they have assets. I just hate the fact that they lose a lot of net income every quarter. That's just the only thing that scares me. So we really want to see them make net income. I guess they're expected to make EPS next quarter and the next quarter, so that's good. But that's the only thing that scares me on Boeing. They're not cheap. Oh, there is a forward PE, 104 forward PE on this company. I'd much rather buy like a GE Aerospace, irreplaceable, super profitable behemoth. They repair all the Boeing machines. They service in commercial. They service these engines from Boeing, and that's where the money's made. Because whenever there's a little dink in the airplane engine debt, they're like, oh, reset the whole inspection. Got to do this again. And GE Aerospace is just a super beneficiary of that. Okay, let's see here. Root, I think this is some kind of tiny insurance company. Kind of like well, I think they're more like a DTC insurance play. Let me check out their website. I want to see if it's more of like a lemonade. Um, okay, so it's like Root has collected over 20 billion miles of driving data, 400% growth. So it's some sort of insurance company. Root Insurance, nation's first licensed insure carrier powered entirely by mobile. Okay, well, anyway, some sort of car insurance company, and check out the growth that they've experienced. Actually, let me pull it up on like an annual basis. It blew up in 2024. I don't know what happened, but yeah, if we go to the revenue down here, like in 2023, it was like 70 mil of revenue a quarter. Then we saw these massive year-over-year growth rates, triple-digit revenue growth, and it's still growing. It's up 26% after it grew 165. It's holding on to that growth and growing it even more. They're making free cash flow. Yeah, let me check out the FCF. Are they net income positive? So they are net income positive. They looks like they lost money this quarter. Maybe it was a one-time adjustment, but they are making net income every quarter if we average it out there, and free cash flow. So what's the forward multiple on this one? Okay, so it is expensive, at a 53 forward PE. So it's not super cheap, but that's also probably because, oh yeah, so they're expected to lose this net income, and they actually lost less net income than expected this quarter. So maybe the projections are too low, and really the forward PE is like a 30 or something. Who knows? Anyway, interesting one. I just like the growth there. They have growth. And they're profitable. That's why that's what sucks about Lemonade. Let's see, are they profitable yet? Net income? Yeah, so they're still losing a sad, like around 30, 50 mil a quarter. They have great top line growth as well, 43% after 20% after 50, like incredible top line growth, but can't get profitable yet. Lemonade's, there's a big short squeeze on that one. Okay. Um, Salesforce. Can you do CIFR? Is that the Cipher Mining Company? Okay, so this might be another one of the Bitcoin mining companies. I don't know. Cipher Mining. Okay, leadership changes. Let's see. There's no forward PE on this company. What do they do? So there, if we look at the revenue in the middle here, it says Bitcoin mining. So this is a Bitcoin mining company. Um, Maybe what I'm guessing is what's happening here is they're converting all their NVIDIA chips instead of mining Bitcoin. Maybe they're doing some sort of cloud hosting right now. So wow, or did they just do some acquisitions? I don't know what happened, but the balance sheet just like massively bumped up. They used to have this unleveraged balance sheet, but then something happened this quarter. Maybe they acquired a business. I don't know. But that could be interesting as like a future catalyst. I guess revenues is supposed to grow 32% still. So some sort of Bitcoin mining company. I don't know what's causing this super rally because it looks like it's done better than actual Bitcoin for the past like year or so. That probably wasn't too helpful. I do apologize. And no way, yo, shout out to Maddie, our label brand on the YouTube stream with the 25 Ron donation. Man, I really appreciate that. If you got a stock you may look at, let me know there. Yeah, Happy New Year. I can't believe we're in 2026. Kind of crazy. A SanDisk. Hey, what's the? You know what? I'll type in the name. This is actually the best performing stock in the S&P already this year. I think literally year to date they're up 50% already year to date. Like crazy. It's this memory shortage that's happening right now. Micron's at an all time high. SanDisk to double their 3D NAND prices for enterprise SSD. So yeah, solid state drives double their prices. That's crazy. So yeah, the expectations are so good. They're so good for this company. The EPS next quarter is going to be $3. It's never even been close to that before. If we go to their EPS right here, this was their one-time adjustment right here, but it's going to be $3 of EPS and then another 350. So the forward PE, this is the crazy part. This is why SanDisk, even after having this monstrous rally, could go up another 20-30%, like pretty easily. The forward PE is a dang 22. A 22 forward PE for the growth that they're experiencing isn't too nuts. Now, if there is like a normalization, a weird drop in these memory prices, SanDisk and Micron might fall. But I mean, the expectations are just so good. Like, look at the EBIT, basic metric, earnings before interest. Next quarter, it's going to bump up. Like, this is kind of how you better understand it. It's a 200 mil this quarter. It's going to be 630 mil, then 750. That's the reason the stock is experiencing so much appreciation right now. It's probably not going to stop because the expectations are just so good. And it's always the fundamentals that moves the stock in the long run and sustains the rally. And the rally is probably going to be sustained here. Same with Micron. Micron, you're not going to believe the expectations. This is your other memory play at an all-time high right now. And if we look at the expectations of the EPS on this one, it's $4 this quarter. It's supposed to be $8 and $9.50. There's going to be literally almost 100 or 1,000% EPS growth in just 1 year. Like it's incredible. Whew, that was a lot. Hey, let's see here. KUL. Hey, try not to spam there. Oh, hey, Ishwar, let's do Salesforce. So here's one of your software plays. CRM play, number one market share. The stock weirdly has been flat since 2020. Like Amazon uses Slack. Salesforce owns Slack, which is an incredible asset right here. I like how diversified that they are. They're in services, sales, and right here. Yeah, here's their Slack revenue. This is just Slack right here. It's just incredible. This is a phenomenal asset. It's up 19% year over year, after grew 8, after grew 12, after grew 52. So that's growing incredibly. Agent force integration, marketing and commerce. And so they're very diversified. Look at these EPS expectations too. And the EBIT. Yeah, so the expectations are really good. They're just kind of They're kind of being hurt by the AI thesis right now, and they're not. Software always trades a little expensive, but Salesforce isn't super cheap yet. Actually, 33 or it's a 30. The forward PE is a 33.9, so a 34 forward PE. It's probably around a fair value right now. Probably fairly valued, and they print net income now. The bottom line is growing faster than the top line. So look at the revenue. The revenue is up 8.6. but the net income is up by 36. So that means margin expansion for the first time ever. Salesforce has never had this previously, a 20% net margin. It's incredible. So if I was a shareholder of Salesforce, I wouldn't be selling out. I probably wouldn't be allocating too much new money in the stock at the current prices. They're also a serial acquirer. Salesforce is always acquiring companies, which I love as well. Just a great software name, and I love software businesses. Yeah, huge backlog too. Basically, remaining performance obligations, basically money owed to them, obligated to them. They have a $59 billion backlog, call it. So Salesforce is a beast. That might be slightly expensive. Um, okay. He says, Trajan said thoughts on InnoData. Yo, this stock is finally seeing some traction. The other two heavy crude refiners I got were VLO and PSX. Ooh, what? Williams is a great company. I love Williams. Actually, we'll check out Williams. Oh yeah, thanks for reminding me, BMOs. Yo, I want to get to PayPal and KULR and PayPal. I want to get to all of these. I'm so sorry. Those are be the next three, if I don't forget. So here's InnoData. This is one I actually own in my Roth IRA. It's finally seeing some growth. And if you like fundamentals, wow, they're up 22% year to date. We're up 94%. I don't recommend you really have this company as a meaningful size position. Don't have it as a big size. Keep it as a small position. But here's why I think this company is a great investment as a small cap. They're still small. The whole company's only worth $2 billion. They're worth $2 billion. That's still really small. A lot of, not law of large numbers like in NVIDIA. But check out what they're reporting versus what analysts are expecting. Every quarter they've beat like crazy. They expected 59, they did 62. They beat on revenue, they beat on EPS by double, and they beat on EBIT, earnings before interest. So this wasn't some one-time adjustment. Like they really are printing revenue right now. You won't believe this. Google, Apple, Microsoft, Amazon, and NVIDIA are their top customers. I kid you not. 5 of the Mag 7 are all customers. I think their top customer is Meta, then Google. But anyway, look at the expectations. It was 62 mil of revenue. It's supposed to be 72 million in 2 quarters. They're already net income positive, already making net income every quarter. They had a one-time adjustment this quarter, making it look like negative year-over-year net income, but it wasn't actually. Obviously that beat by double what analysts expected. So don't be worried about there. The free cash flow is insane as well. So this is a small cap, a $2 billion company, deleveraging, liabilities were 46% of assets. Now it's only 36%. So anyway, that's why I picked up InnoData. What's this app? Oh yeah, hey B-Dog. This is actually a brokerage. It's called Moomoo. It's actually in the link tree in my bio if you want to use my affiliate link. Very first link in the link tree in my bio. But yeah, broker called Moomoo. You can just type it into Google. And if you deposit like $100, we'll both get some free stocks. But yeah, free brokerage, my favorite app to analyze stocks on. Hey, what up, Catherine? Give me a minute here. I do want to get to some of these names first. Oh, Palantir. Tony, remind me to get to Palantir. We got to get to Palantir. So let me do Cloudflare. Then we'll get to PayPal too. PayPal's an interesting one. Looney, what's up, Looney? Yo, Intel, a lot of hedge funds are starting to move money into Intel after the president and stuff is doing stuff to... Anyway, here's Cloudflare. They're really expensive. That's the sad news. There's no forward PE. They're actually like the same amount of expensive as like Palantir on a peg, PEG, price earnings growth. But let's see. Oppenheimer predicts over 30% revenue growth for Cloudflare in 2026, despite concerns following a 2025 outage. Oh, I remember that outage actually. But yeah, that revenue growth, yeah, is up and to the right. Revenue is going to go from 480 million to 613 million. So yeah, top line growth is there. Still not net income positive yet. They're still losing a little, not crazy amount, 50 mil, 30 mil of net income a quarter, but the top line growth is there. And as long as they keep up the top line growth, they should be good. And they're investing a lot into the future. They bought a company the past 2 quarters for over $1 billion. That's kind of why their balance sheet out of nowhere like spiked up like that. They bought a company, I forget the name of it, but it was like for 1.4 billion. But Cloudflare, this is your crazy internet kind of cybersecurity play, DDoS protection play. But did you know, like, I think it was 15% of all global internet traffic goes through Cloudflare in one way or another. And that, like, all global internet traffic goes through Cloudflare, like 15% of it. It was a crazy metric. So great company, a 64 bill market cap. Sadly, though, they just can't get net income positive. I wonder what's the Morningstar research? I don't know if Amazon's getting into their same space right now. Let's see. Oh yeah, Cloudflare is in direct competition with well-established, far larger such as Amazon, Microsoft, and Google in the edge computing space. Cloudflare is unprofitable, but let's see right here. Cloudflare security business set to grow fast. Cloudflare has a long runway for growth in enterprise security. So anyway, yeah, I love cybersecurity. That's an industry that I think is just going nowhere. Or isn't going away anywhere. Like some of the software names are getting hurt, but I think these cybersecurity names are immune because hackers will just utilize AI and get better at hacking, and will always need cybersecurity. Let's get to PayPal. Let's do PayPal. And oh yeah, we got to get. I'm so behind. We got to get to Williams and Intel. We're gonna be live for a long while. We've already been live for a bit. And Dillard's is an interesting one. Dillard's is a buyback monster. So here's PayPal. Sadly, the stock has done terrible. PayPal's the same price that it was back in 2017. And it's not just PayPal. It's not like it's just them. Like their biggest competitor, XYZ, has done the exact same thing. This is Block, XYZ. They're the company that owns Cash App. They're also the same price as they were back in 2018. So I'm not just like picking on PayPal. But yeah, Cash App, that's 62% of this company. PayPal got Venmo. But yeah, the two stocks look pretty similar. Unfortunately, these just can't catch a break. And they're trading at like this commodity multiple, a 10 forward PE on PayPal. I like it. I like what they're doing right now. They're doing massive buybacks. So if we go to their bottom line right here, they're easily making, and this is after tax, they're easily making over a billion, or we'll call it 1.2 billion of after tax net income a quarter. What is PayPal doing with 1.2 bill of after tax net income a quarter? Share buybacks. Look at the top. This is nuts. They're doing literally 1.5 billion around of buybacks a quarter. And here's what that does for the shareholder. We see the net income is up by 23 or 24. The EPS is up by 32. Remember, the EPS growth rate and the net income growth rate should always be the exact same, but the share part of the ratio went down. So whenever they buy back shares, it makes the EPS go up higher, makes the PE ratio go lower, gives you more ownership in the company, makes the cost of the dividend go down, and should help the stock go up. But unfortunately, it just isn't working right now because I don't know if it's just like they're going to be out innovated in the long run. I don't really know why the PE ratio is so low, like a 10 forward PE. I mean, you can't go wrong probably just owning a little bit of this one. Maybe I guess we can read what the bears are saying here. Separation between online and point of sale is blurring. PayPal may increasingly come into competition with larger companies. Alipay and WeChat provide examples of how government could favor local players, could shut PayPal. Opportunities to monetize Venmo could be limited. I don't know. So anyway, there's kind of your PayPal analysis. I mean, they're cheap, 10 PE buyback machine. I almost wish, how they're spending 1.5 billion a quarter on buybacks. Imagine they do like some 1.5 billion or, $7 billion acquisition of some great company. I know Honey, there's a lot of, anyone see the videos on YouTube about Honey being a scam and all that? So PayPal's an interesting one. So Williams is a nice natural gas play, and you get a great dividend too. And look at this, like compared to your average oil and gas stock, this one is done really good. And you still get a high yield. Even if you buy this stock right now at close to all-time highs, you will still get, just in a dividend, 3.3% of your money back every year just in a dividend. And check out the net income. Well, let's go do a dividend payout ratio. Let's see how safe the dividend is. So right now we can easily see they're making 500 to 700 million of after tax net income a quarter. That's after they pay like 200, 300 mil taxes. So they're easily making, we'll call it 650 million in net income a quarter. And the dividend cost, okay, so look at this at the top. It is a bit of a high payout ratio. Dividend cost 611 million of net income a quarter. So as long as they're making over 611 million a quarter, they're good. Now, with some of these natural gas pipeline plays, you sometimes don't even look at the net income. You really look at the cash from operations down here. If you do a dividend payout ratio, it's like a 50%, because you just value these dividend payout ratio these differently. But anywho, even on the net income, they can still afford it when we don't give them the benefit of the doubt, and it's more of a natural gas. Like, they've done great. It looks like they're in a regulated interstate natural gas. Anyway, natural gas play. So Intel, this one, there's a lot of news around this one. Nvidia took a stake into this one. The government has a 10% stake. Nvidia has a big stake. Nvidia's moving some of their older series battered chips, moving that manufacturing to Intel to help them out. Let's see right here. Intel gains momentum as U.S. government stake. Yeah, and government owns 10% of it, and chip advancements highlighted. Sub 2 nanometer CPU processor. Intel expressed gratitude for the backing. So government owns 9.9% of it. Let's see right here. So we don't really look at their right now financials because they're not great. But I guess it's the future outlook that's positive for Intel. The sentiment's really good. Hedge funds are moving some money into Intel. Their PC GPU market share is going down a little bit, but the government basically cannot allow Intel to go bankrupt. Intel launches Core Ultra Series 3 processors with manufacturing up in 2026. That's good. And Intel partners with NVIDIA on AI server systems, reports Q3 revenue. So anyway, integrate CPUs with NVIDIA GPUs. So yeah, there's just a lot of good sentiment around Intel right now. Hey, what up, Lance and Travis? Yo, sorry if I'm missing some of their. Yeah, happy Saturday. I try to stream every day. What's this app? Hey, this is actually a brokerage right here, a broker where you buy stocks on. If you want to get this brokerage, it's in the link tree in my bio, that very first link there. It's an affiliate link, so let's go. PayPal 100%. Hey, nice there, Cheese. What's the best thing to do for a beginner investing in the stock market? Well, do the right thing. Don't buy junk. This whole stream, we're trying to analyze what stocks are good and what stocks are junk by looking at the financials. But the average retail investor and the average hedge fund literally cannot beat the S&P 500. My number one advice is to do the most boring thing, but it actually works and you won't feel left out, is to just buy the S&P 500. If you can't do it as the backbone of your portfolio, at least have it as like 10% of your portfolio, because when it outperforms you, you won't feel left out. And then after you buy the S&P 500, buy some individual names love, and trust that have great fundamentals. Like here's my portfolio right here. I got Google. I love YouTube and all their assets. I got McDonald's. I have United Rentals. I have Meta. I own Amazon. I own Coca-Cola. Then play around with some individual names. And I think that's the recipe to outperform the S&P 500. The goal isn't to get rich quick with stocks. That's what people always get wrong. The goal is to just get around 8 to 10% of your money back every single year. And, that compounded, the snowball effect starts to happen. You turn $100 into 110, but then that 110 goes into 129 and, it snowballs up higher. And as you deposit more money, the snowball effect just gets bigger. Like my account for the longest time in here, way back here, I love being fully transparent. This was like a $200 account. You start with a little bit amount of money, and then, as your stocks grow and as you contribute more, you should just do great. So let's see right here. Yeah, S&P 500, that ticker symbol VOO. Let's see right here. Hey, what's up? Let's see here. For AI, I like CoreWeave, Bloom Energy, Astera Labs, Rubrik. Rubrik is a very nice cybersecurity play. Let me actually go over ALAB right here. This is Astera Labs. I think this is a great one. Oh, and Catherine, we'll get to Iris Energy too. My bad on that one. So here's Astera Labs, a great growth name in my opinion. They're really expensive, but this is the kind of stock that deserves a really high valuation because they need to be rewarded for their incredible growth. First off, they're beating on every analyst expectation. Like this quarter, they expected 206, they did 230. So they beat on revenue. They beat on EPS by double. They expected 23 cents, they did 50 cents of EPS. That's more than a double technically. And they beat on EBIT. Like this wasn't some one-time adjustment, like they really did beat by double. So this is what you want to see for a growth name. These are the kind of stocks that can just continue to go higher. The revenue's grown triple digits for the past 4 quarters. It's up 103%. After it grew 206%, after it grew from zero, like incredible growth. And out of this 230 mil of revenue, if we go to their bottom line, they're the most profitable they've ever been. 91 million of net income. And just to add even more safety, to make the stock even better, they have a completely unleveraged balance sheet, no debt at all, huge safety net. They don't owe anyone any money. And they have this massive cash pile, $1.13 billion of cash. And that cash isn't just sitting there doing nothing. It was in the short-term investments. So that means they're making interest on their cash, Literally, they made 11.5 million, record amount of interest on their cash ever. They make 11 to 12 million of interest on their cash a quarter, which is adds money to the bottom line, helps offset the taxes they pay. It's great. And same with the free cash flow. Incredible growth. This is the growth company that you want to put on your watch list, in my opinion. They're expensive, at 106 forward PE, but they just got EPS positive. So and they always beat on expectations. Like that 100 forward PE is using this orange line right here, expectations, which is already generous or not, but they always beat by a massive amount on this EPS. So the forward PE could be like a 40, and then you do a 2-year out multiple. The PEG, this is ALAB Astera Labs. Yeah, the ticker's in the top left. Sorry if it like hides it. I think you can like hold down on the screen and hit hide display. But also, I haven't even mentioned this once a single time on the stream. If you want to support me, there's only one way to support me, and that's watch the stream from YouTube, subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio, but you can just type into YouTube Nathan Robert, and you can rewind it to the streams up there forever. But yeah, just watch the stream from YouTube. TikTok's always removing me from For You page eligibility. I'm always having issues, so that just mean a lot, and I don't get many viewers on there. Okay, so let's see right here. What up, Connor? And oh yeah, let's do Iris Energy. So Iris Energy and Nebius are all very similar. Iris Energy is still around like 60% of the revenue comes from Bitcoin mining. But this company is literally converting the company from just mining a bunch of Bitcoin to cloud hosting. They got a huge deal, I believe, from like Microsoft. So where some of the Microsoft Azure cloud is going to go on Iris's data centers. Basically, this is a data center play. And wow, look at the expectations. Revenue this quarter was 240 million. And analysts are expecting 285 million. So the expectations are good. Yeah, wow, that's crazy revenue right here. This looks like a one-time adjustment. They didn't actually make 300 million net income, but look at this top line revenue growth. That's what's crazy about Iris Energy and why the stock has had such a monster return. I mean, it's up 355% after grew 50. Like the revenue is just seen a massive growth. And same, it looks like they're now making net income every quarter, these past 4 quarters now too. The forward PE though is a loss. Okay, so yeah, that's what I thought. But that's using weird expectations. I don't know. Maybe I almost should look at this one on Webull to get what's their forward PE? They gotta have a forward PE, right? Oh yeah, okay. So a 48 forward PE. That's not nuts. For the like really, this does need to be rewarded. This revenue growth right here really is impressive. So anyway, I think I can't remember it exactly, but I remember the Microsoft Azure cloud is moving over to some of it on Iris Energy's GPUs. APLD, that's kind of the same thing. You know what? That's actually owned by NVIDIA. NVIDIA is trying to prop up all these names right here because in the long run, they're really the bag holders. They're buying a bunch of these crazy expensive NVIDIA chips that'll be worth nothing in 15 years. And like Jim Cramer short, that's good news though. Jim Cramer shorted all these for the depreciation thesis on all these names, and NVIDIA's giving them money so they can buy. Like NVIDIA has a big stake in CoreWeave, APLD, Nebius, because they given them money just so they can go buy back more NVIDIA chips. So let's actually look at APLD right here. Whoa, they're up 18% on Friday. That's ridiculous. Let's see if there's any news recently. APLD reports earnings with 250% revenue growth and major new lease agreements. That's great. Their new Polaris Forge 2 camp is expected to generate $5 billion in revenue. Total contract capacity reached 600 megawatts. Let's see right here. Any more news? Freedom Capital initiate buys. Okay, anyway, let's go look at their revenue growth. So, whoa, look at this quarter. They deserve this growth that they've had. So the revenue growth is insane. They expected 81 mil of revenue. They did 125 million of revenue. So this top line growth is absolutely ridiculous. So yeah, they've converted the business from Bitcoin mining to data center hosting. Check this out, data center hosting business and high performance compute hosting business. When I think if we scroll back, I don't know how far, I used to say like they were mining Bitcoin. Anyway, they're doing great. Like they have a great backlog. They're not profitable yet, but it's just that top line growth that was a massive beat. Like they beat on revenue, they beat on EPS, they did miss on EBIT, but that top line growth was just massive. Yeah, APLD, interesting. What do I need to do to buy the S&P 500? You just get a brokerage, like this app right here. I like this app. If you want to get this brokerage, it's in the link tree in my bio, very first link there. But then you just buy, you go to VOO. This is the S&P 500 ETF, and then you just buy. You don't even have to buy one share. What I love is you can buy fractional shares or on any brokerage, on Robinhood. By the way, all these brokerages are all in the link tree in my bio. Robinhood's a really simple platform as well. You can buy like a fractional share of it. And then, yeah. Then you're chilling. Then your money is now working for you at 8% a year. Yeah, again, this platform or this brokerage, my favorite one, the one I'm on right now, free, completely free, costs nothing, no commissions. And on your idle cash, you get a 3.35% APY. It's in the link tree in my bio, very first link there, a broker called Moomoo. So, oh yeah, let's get to Dillard's. This is a surprising one. Then we'll get to SoFi. Oh, we got to get to SoFi and Palantir and some of these other good names. Hey, what up, In and Out? What happened with HP? Can we look into that? Yeah. Oh, I'm so behind here. I forgot to look at the YouTube chat. What up, Schmid in New York? He said Datadog, VCIG. Oh, I'm so behind. We got to get to these stocks. What's going on with RVMD? RVMD is about to get acquired by it's either Merck or AbbVie. So here's Dillard's. This is a surprising stock. It's one of the mall companies. You go to a mall and you see like a Dillard's. They sell like, I don't know, everything there. The stock has just been a monster of a performer, and they're not crazy expensive. The forward PE is a 20, so trading at 20 times next year's net income. That's really not crazy. But the buybacks have been really good. We can see the net. Here's a quick way you can tell if a company does buybacks. You look at the net income, it's up by 4.18. The EPS should also be up by 4.18, but it's up more. It's up by 7.5. So that means they've bought back 3.5% of all the shares that exist the past year. So they bought back 3% of the company. But the best part about this one is the special dividends. So look at this. They normally do a 30-cent dividend normally. They just did a $30 special dividend, and they're always doing these sort of special dividends. They did a $25 special dividend last December, then a $20 special dividend. Like, it's insane the dividends they reward, because their normal dividend, this is what I love about them. Their normal dividend is super low, a 0.15% dividend yield. And the payout ratio on that is a 2.7. I've never seen this. Extremely low dividend payout ratio. But they do that one time a year special crazy dividend that bumps your yield up to like a 3%. So, anyway, it's really interesting. Dillard's really does make a good lot of net income, around like 150 to 200 mil of net income a quarter. So it's an interesting one at a 20 PE. I wouldn't sell that one if I was a shareholder either. Yo, VC, remind me to get to these other ones. This actually, we're not going to cover this name, sadly. You look in the top right, the market cap. This company's worth $6.2 million. And, they're just, this is the kind of stock that's just gonna just go bankrupt. Let's see. Do they have any? I guess actually they do have a good balance sheet, but I just don't know. We should cover a 6 million. Oh, this is not even in US dollars, so this isn't even some US name. What was that flag? Where are they headquartered? Malaysia. Okay, so they're headquartered. This is a Malaysia company. That I'd be so careful with this one. The whole entire company is worth 6 million. I'm sure maybe someone in here could buy that whole company. Do you have any covered calls in your positions? No, I haven't done a single option contract in over a year. I don't really do options. I don't do covered calls either because I don't need dividend income. And selling calls on anything has not been the right move. The S&P 500 just hit an all-time high. And I haven't even done a portfolio the whole over hour we've been streaming. I forgot to do that. Maybe we'll do that in a minute. But yeah, we hit an all-time high. I'm so happy. So here's SoFi, though. Here's another great one. I do own SoFi. We're up like a crazy 5x on them. I regret every share I've ever sold on my SoFi. Same with Robinhood. But SoFi deserves all the hype around them. This is a growth behemoth, a phenomenal growth stock, in my opinion. If we go right here to their financial services business, this is what's nuts. It's up 76%. After grew 101, after grew 222. That's some phenomenal growth that not even the analyst expected. And we can see the analyst expectations right here. Like, this is the reason the stock has done so good and it's sustaining the rally, because fundamentals are great. It's up and to the right. They beat on expectations every quarter. They beat on revenue. They beat on EPS. They beat on EBIT. That's why I think analysts are really taking SoFi serious. They're making like 100 million net income a quarter plus. The revenue's up and to the right. The growth of their financial services and the lending is doing great. So there was a little bit of dilution. That's why the stock did gap down a couple days ago. They diluted like by $1 billion, but that's what SoFi does. They take they raise money and then they just loan it out. Hey, thanks. Hey, Jello, good to see you. Thanks for removing all those scammers in here. Yo, we just blocked 3 accounts, all with the same name and profile picture and stuff impersonating me. Thank you for that. Please watch out for people impersonating me in here. If you follow me, you might get followed by someone impersonating me. Just know I'll never follow you, DM you. I don't sell literally anything. I have no course book. I don't coach. I don't manage anything. Please watch out for people impersonating me. Um, okay, so let's see here. Okay, Slim Jim, triple upside crossover on SID. Oh, wait, I wanted to get to HP. What's the ticker symbol for HP Inc? If you can give me the ticker symbol for HP Inc, we'll find that one. Hey, Lance, thanks for hitting the like button. I appreciate that. So let's do SIDU stock. I think this is a Chinese name. Or no, it's not. Cetus Space. Let's check it out right here. Oh, and Dell. Oh, Dell I actually really like. And Adrian, what's up, dude? He said MRAM. We'll do MRAM too. Really good to see you after this. So this is a very small one in the market cap in the top right. This whole company's only worth $218 million. That's a very small market cap, but there must have been some sort of good news, good catalyst to send the stock up. Cetus Space appoints aerospace veteran to the board. Well, let's see what the actual numbers are. Do they have revenue? So they do have revenue. It's a little choppy. You know, it's $1 million of revenue a quarter, not great, and they lose 5 to 6 mil a quarter. So I don't love this. There is no future. Yeah, there is no analyst covering this one currently either. So we don't really get to see the expectations. I'm missing something because there was crazy volume on this day. I don't know what happened. There was some sort of good catalyst, but if we just judge this one off their financials, I'd really probably stay away from this one. You know, they're worth 200 million and they've lost well over 20 million this year, which is over 10% of the market cap, and the revenue's not really growing. So yeah, I'd be careful with that one. Could be a fun swing trade though. There's a lot of momentum around that one. Could be nice. So, what's the ticker for your favorite brokerage? The ticker, you know, this brokerage I'm on, FUTU. There's also Hood, HOOD, Webull, BULL, IBKR. Those are all great brokerage stocks. Cetus Space got a Golden Dome contract. There you go. That's the news. Appreciate that. Rocket Lab. You know what? What up, Brian Paul? We got to get to Flex. Yo, I'm so behind. So yeah, Rocket Lab, this is probably the best space stock if I had to pick one. This one's the best, but they're so expensive, like Palantir type expensive, where the risk to reward buying it today isn't great, but they have a great backlog. They just acquired Geost. They're getting crazy NASA and JAXA contracts. So if we go to their space systems revenue, this is what you want to see. It's up 36%, after grew 81, after grew 15. Like they're on a streak of growth. It was over 100 million of revenue for the first time ever this quarter. So that's at a record, and not just the space systems, but also their launch services that grew 95% year over year. So both businesses are headed in the right direction. The expectations are the revenue is going to go from 121 to 180. So there's even more revenue growth there. They're still struggling with net income positivity, you know, losing still 50, 60 mil a quarter. But as long as they keep up this great top line growth, you know, 47% year over year revenue growth, and it's going to continue because it's going to go from 122 to 180. This one should be fine. Yeah, and they're fortifying their balance sheet. Yeah, so they did just dilute you by 500 million and 300 million, but it fortified up their balance sheet. And that's probably how they that's how they could afford this acquisition of Geost and some other names. So anyway, Rocket Lab, the most quality space stock out there. I don't know. ASTS is the other one that's just now getting a contract. HPE? Oh, is it actually HPE? Oh, HP Inc. Okay, that's it. Okay, we found it. Appreciate that. I made 5K on Sea-Doo. Oh, heck yeah, dude. Nice, USA. Carnival Cruise Line. That's interesting. Oh, and Novo Nordisk. They just got added on Amazon. So here's HP Inc. Unfortunately, this one has not done too good. I think this company makes like those HP laptops. So PCs, personal systems right here, and this kind of hardware. The revenues for the full for fiscal year 2025 or it's lower than it was in 2019. So the hardware business is not doing too well. Oh, and they make printers too. Oh yeah, they sell the printers for break even, and they make all the money on the cartridges and the ink. But look at the printing revenue. Sadly, it's kind of declining. Yeah, single digits for the past 4 years. That's really unfortunate. That's probably why the stock, has been flat. Dang, look at this. So HPQ is the same price that it was in 2001. I can kind of see why now, unfortunately. But the good news is they're still making a lot of money every quarter. Like they're still making 400 to 800 million of after-tax net income a quarter. So what's the PE ratio? 7. They just sell a commodity. Honestly, they probably deserve around a half of this at like a low single or a single digit PE ratio because the revenue kind of is just going to decline single digits maybe for the rest of the time. I don't know. And they're really leveraged. That's a lot of liabilities and debt to pay. But I mean, that's not crazy because they're making 2 bill plus of net income a year. So it's really not the end of the world. I don't know. It's an interesting one with a 5.4% yield. That's a crazy yield, kind of like a Best Buy. So yeah, that's kind of it's kind of like you weigh the things like they sell commodities, PCs and printers, and it's kind of declining single digits, but maybe they could do acquisitions and hopefully wrong. You wrong. HPQ makes the printers. So yeah, hey, what's up, Michael? Good to see you. Kraft Food. Kraft Heinz, I think Buffett owns that one. Don't forget to look at Dell. Oh yeah, hey, actually, let me get to Novo Nordisk, and then Dell, when we think of HPQ, Dell is kind of another one where I like Dell, but they traded a low commodity multiple. The brokerage is telling me there is a bearish continuation diamond, whatever. The forward PE is a 12. So Dell trades at 14 or actually 12 times next year's net income. Pretty cheap valuation as well. And they have the growth. Check this out. If we go to their infrastructure solutions, this just in the most recent quarter specifically had a nice little bump up. Okay, sorry, my Wi-Fi wants to be an issue. Infrastructure revenue, please. Maybe we can see this one, client solutions. Okay, so the client, that revenue's been flat. It's the same revenue it was in 2019. But when we go to this infrastructure revenue right here, this is what's seen nice year-over-year growth. It's up 24%. Last quarter's up 44%, 12, 20. So that's starting to see some nice growth. And the EPS expectations are up and to the right as well. The EPS is going to go from $1.37 to $2.23. And they beat on expectations by like 25% this quarter on EPS. They expected $1.97. They did $2.28. So this quarter was good. So yeah, this company also makes a lot of money every quarter, easily over $1 billion of after-tax net income a quarter. So they're making $1 billion of after-tax net income a quarter. They pay a dividend. Let's see how much that costs. The dividend only costs $350 million. And if you're wondering, how did the cost of the dividend go down from $390 to $350? Because they bought back their own shares. And when you buy back your own shares, you don't have to pay dividends to those. So they're actually spending crazy amounts on their share buyback program. Actually, they've bought back, I think, like 10% of the company, which is crazy. So look, the net income's up by 32, but the net income per share is up by 39. So they bought back basically 7% of the entire company. I can't believe it. They bought back 7% of all the shares and paid you a 1.7% dividend. So interesting one there. I like it. I like this one a lot better. And notice this one, not the same price that it was a long time ago. They have had growth. Yeah, it's like a value play. So let's look at Novo Nordisk right here. I have lots of money in KHC. Yeah, let's do Kraft Heinz too. We'll do Kraft Heinz. The original investors milked that one for the dividend, and they've just been struggling ever since. We'll check them out. So here's Novo Nordisk. Good news, they just got added, and I went on Amazon and checked. It's really there. Amazon Pharmacy offers Novo Nordisk's Wegovy weight loss pill. So they finally made a pill version. They were working on that for a long time. Or Wegovy weight loss pill in the U.S. with tiered pricing. Monthly price ranges from $149 to $299 for self-pay. Okay, let's see. Yeah, Amazon, China Supreme Court upholds Novo Nordisk's semaglutide patent validity. Y'all aren't gonna believe this. The semaglutide literally comes from. Oh, I'm gonna forget the name. I was just looking this up. It's not a Komodo dragon, but it's literally so. It's literally has the name monster in it. It's like that big lizard. They take the saliva from that lizard, and that's the compound semaglutide for the patent. But this patent expires. Yep, this is one of the big things that's why this has such had a PE collapse is they lose their exclusivity for Ozempic in is at 2028 and 2031 for Europe patents. So they lose their exclusivity for Ozempic, which is that's the big like kick in the nuts, which sadly might mean this company really deserves around a 16 forward PE, and that's what they have, a 16 forward PE. But there's so much, this is a pure weight loss play. 93% of this company's revenue is their diabetes and obesity care products, and they agreed to lower their prices like crazy on Ozempic, and that just crushed this quarter's earnings. So check this out: this quarter revenue, analysts expected 12.1, they did 11.7, but that wasn't the big deal. Like revenue was still up 10% year over year. This is the bad news. So the revenue's up 10% and the net income is down by 22. And that wasn't some one-time adjustment either. Like the real operating profit, the profits fell by 26%. So that means because they agreed to cut the prices, the margins got crushed. Their net margin went from 38% to 26. And that was a real 26%. The gross margins fell by 10%. So the margins are falling because they agreed to lower their prices. But it also, like, they got added into Medicare and Medicaid. Like, they added Ozempic to that. And I like that the pill is now really successful because that wasn't a thing a year ago on this company. So Novo Nordisk, at the end of the day, it's not the worst. I mean, it's your weight loss play. There's a lot of competition from like Eli Lilly, Metsera, but I think it's really going to be commoditized, these weight loss prescriptions eventually, but I don't like the patent expiration. Like it's a balance of like there's good news and bad news, and you got to weigh it. What happens is, this is actually a brokerage right here. Sorry, people keep asking. It's in the link tree in my bio, very first link there. A broker called Moomoo. Okay, let's see right here. I almost said that name. SMH ETF. Yeah, if you're looking for a semiconductor play, hey, this brokerage is telling me there's what is this? We don't really do technical analysis, so I like that this app kind of does it for me. But we look at fundamentals. But this is one of my favorite ETFs out there. So if you don't know which semiconductor play to buy, because you're like, I know all this AI hype is really benefiting, these semiconductor plays. Which one do I buy? Do I buy NVIDIA or Taiwan, the one who makes the NVIDIA chips, or Broadcom as a TPU play, or Micron as a memory play? Well, you could buy this ETF right here at ticker symbol SMH that diversifies your money for you, market cap weighted, into the best semi plays. And no one who owns this ETF has been disappointed. It's kind of just been up and to the right. So I wish I bought this instead of like AMD, because this has just been killing it. So yeah, SMH is kind of tough to buy at all-time highs, but that's one you could put on your watch list to potentially buy if there is a big dip in semis and you're bullish on it, because it really does crush the S&P 500. Oh yeah, Carnival. Oh yeah, the Gila monster. That's what it was. So Carnival Cruise Line, sadly, I don't love just this whole industry. I don't like the airlines and the cruise lines. They get smoked in a way. It says like they still haven't even recovered from 2019. This is a swing trade you play as like a consumer kind of travel play. You swing trade it, but the fundamentals really have improved. It's really impressive. They really have improved. If we go to their net income right here, the company's actually made net income in the past 4 quarters. Obviously, if we go back to 2021, where in the pandemic, they were burning literally 2 sometimes more billion of net income a quarter. But now that this stuff is finally over, they're finally making consistent profits again. So that's the good news. That's why I think this one probably won't go down too much. I mean, the forward PE is at 12. Yeah, that's a cheap valuation at 12 PE. But there's funds out there that buy the S&P 500 but remove the cruise lines and the airlines because they just don't do well in the long run. Like this, it's really, I don't really expect this to outperform, the S&P 500 in the long run. But actually Royal Caribbean is a weird exception, and I like that Disney is getting in on the cruise lines. Royal Caribbean, I don't know how, but they just own a bunch of cruise lines. This is their after-tax net income every quarter. Easily, it's so consistent and good, and it didn't fall as much like it. Well, I guess they did lose a lot of money in 2021. It wasn't as bad, but they make way more money, and that's why the stock has done so much better. So it's I don't know. Carnival Cruise on 12 PE, the profits, they really have fixed their numbers there. Oh, let's do this one. My bad, Adrian. MRAM. Yo, sometimes I'm so sorry. Please try not to spam a chat there. I miss so many stocks and I apologize. As of 2026, most significant recent company acquired by Hewlett Packard is Juniper Networks. See, I love that HPE is doing acquisitions. Hey, what up, YouTube agent? And Flex, oh, hey, you still in here? Let me get to Flex there, Numar. I'm so sorry I didn't get to that. And CGE, remind me to get to these. Oh, and Oklo. I got some news on Oklo too. So here's MRAM. This is Adrian's new purchase. He always gets the good small caps. So let's see here. Yeah, this in the top right, they are small. They're worth $274 million. But that's also the good news. They're only worth $270 million. There's could be a lot of upside. Let's see if they have good fundamentals here. So revenue is $14 million this quarter, up 16%, up from kind of recovering from 2024's dip. The expectations are good. It's supposed to go from 12 to 14 mil. Oh, wait, they're okay. This is good news. They're actually barely losing any money. They actually made net income this quarter. I'm guessing that's from their interest because look at this. The operating profit says I love that we could do this research. The operating profit, the core business lost 1.5 million, but how is the net income positive? Because operating profit doesn't include interest they make on their cash. So if we go down here to their balance sheet and look at their cash, so they have $45 million of cash. It almost worked perfectly. I bet they'll make 1.8 million in interest, or yeah, they're making 500K of interest a quarter, and that's offset. So they're investing in the future too. It's an interesting one because they're not losing any money. So it's kind of like a $200 million market cap where actually look, they're worth $274 million and they have no debt and $45 million of cash. So literally 20% of this company's market cap is their cash on hand. So 20% of the market cap is cash. They're basically just now getting revenue and getting EPS. We're starting to see some of the growth come back. So it's an interesting one. I'd keep it as a very small position just because it's so tiny, but interesting name there. So yeah, I want to get to Uber too. So Oklo, they got some sort of deal with Meta. They kind of rallied with all the other nuclear names. So yeah, look at this. Meta partners with Oklo for 1.2 gigawatt nuclear power projects in Ohio. This is like so far away. Pre-construction starting in 2026 and full capacity expected by 2034. So super, super far away. So yeah, Oklo's a startup right now. If we go to the that's why this is my least favorite nuclear play. If I had to pick one, we go to the revenue, says no data because they've never sold anything, not a product or a service. They're not expecting any revenue anytime soon. But yeah, I like a Vistra Energy, but that's why all the nuclear names went up crazy. Vistra Energy might be one of the better ones. Vistra Energy signs 20-year nuclear power agreement with Meta, and that's all instantly accretive to their free cash flow because they actually own 5 reactors that are already up and running. CEG though is the best nuclear play of all time. They own 30% of all the US's nuclear reactors. They basically have these fully amortized nuclear assets that were built decades ago that are fully paid off for and just make them pure profit every month, every quarter. And this is the best nuclear play. And they just acquired Calpine, which is incredible. Completes acquisition of Calpine. But yeah, CG becomes now the largest U.S. electricity generator, largest literally U.S. company, right here, electricity company. So it's just crazy. And I do own CEG, so I am biased. What's this app? Yeah, hey, Thomas, this is a brokerage where you buy stocks. If you want to get this app I'm on, it's in the link tree in my bio, very first link there. It is an affiliate link, full disclosure. So if you go and deposit $100, we'll both get some free stocks. But yeah, this is my favorite brokerage app to buy stocks on. You can just type it into Google, broker called Moomoo too. But yeah, my affiliate link's in the link tree in my bio. Get a nice 3.35% APY on your idle cash and stuff. Okay, so, Brian said Meta. That's a cool one too. Let's do Meta right here. Fang. Oh, that's Diamondback. You know what? Oh, and Uber. Yo, there's so many great companies. I apologize if I don't get to them, but we've been live for an hour, 30 minutes. I stream every day. We're always in here looking at y'all's stocks. I enjoy this. So Meta's a phenomenal Mag 7 to buy now and just never sell. It's at a low valuation. They're trading at a forward PE. Where is this? A forward PE of a 22. Its current PE is a 29, and this Current PE 29, where no, you don't really look at the current PE because they had a one-time adjustment. Because if you go to their EPS, it says they made $1.05 this quarter. It says the net income was only 2.7 billion. Complete one-time adjustment, $15 billion one-time tax charge. That'll never happen again. But it's included in net income. Are you live on YouTube too? I am. That's a great way to support me if you want to watch a stream from YouTube. My YouTube channel is called Nathan Roberts, also in the link tree in my bio. But yeah, the net income was only 2.7 billion. We can tell it was a one-time adjustment because the operating profit was a record Q3. So the record Q3 profitability quarter, record revenue of any quarter ever, 51 billion of revenue, the first ever quarter it's ever over 50 billion. Meta literally has an active users, daily active users of 3.54 billion. So pretty much half the world is on a Meta app once a day. That's WhatsApp, Facebook, Instagram. Threads is now nearing the same amount of daily active users as X. And check out their cash flow investing activities. This is one thing being questioned. Meta is spending a bunch on this AI craze, a bunch on, data centers and NVIDIA chips. So they're spending 20 to 25 billion a quarter. And they now, for the first time ever, Meta, for the first time ever in history, has a net debt position with their Prometheus bond issuance. But I love that they're spending. They can easily afford it. They're not spending it on anything else. They're so bored. They're paying dividends now. So Meta's a never sell. Oh yeah, Meta's doing these nuclear agreements. I really like the Meta Ray-Bans. That's such a great, I think everyone's going to get into that. Like Google Glasses, Apple, they're all going to copy them. So, hey, just cruised. Good to see you, man. Hope you're having a great day. So let's do FANG real quick. I think this is Diamondback Energy. So yeah, if you're looking for an oil and gas play, this is like an alternative to like a Chevron, or I think they're more of like a driller, I believe. So upstream, yeah. But they've been beating on expectations like crazy. Let's see what their net income is. Yeah, so check this out. They're easily making 800 million to 1.5 billion. Yeah, Uber's next for sure. Uber's definitely next. And Netflix too, we'll get to. But yeah, FANG is easily making 700 mil to 1.5 billion of after-tax net income a quarter. Let's go see how much the dividend costs because they pay a dividend, cash pay dividend. The dividend only costs 290 million a quarter. Dividend costs 290, so they have a really low payout ratio. So they can easily afford, what's their dividend? A 3% dividend they have right now. Safe payout ratio for, commodity multiple, a 13, a low teen multiple, but they have been beating on expectations. They expected 3.5, they did 3.9. So, you're not buying this to outperform, the tech heavy S&P, but you buy this for the diversification into oil. They have not done as good as like a Chevron or an Exxon right now. I believe because Chevron and Exxon, they can capture the commodity inflation more. I don't know. Celsius doing well. Yo, should we look at Celsius, Brian? I love Celsius. Okay. Uber. Oh yeah, Uber stock. Let's do Uber right here. So this is a great software name to literally buy, never sell. And they're cheap. They're actually cheap. If we go to their valuation, the current PE is an 11. They had a lot of one-time adjustments, so that they're definitely not at 11 PE. But if we go to the forward PE, they have a 25 forward PE. That is super cheap. This is another great metric. This is their monthly active consumers. So not just monthly active users, but monthly active consumers. They have 189 million. When this exact same time last year, it was 161 million. So their monthly active users are growing like crazy, and they're still growing. COVID's gone, but they're still growing. The mobility revenue right here is up 19%. After grew 26, after grew 33. So that just at a record just continues to hit a record every year, every quarter. And the same with Uber Eats, the delivery revenue, that's also at a record. I can't believe how both businesses are just growing like crazy. So if we go to their net income, it says they made 6 billion of net income this quarter, which obviously says the EPS was 78 cents. They didn't actually, but they did make a record Q3 profit of $1 billion. They're making like $1 billion a quarter. So that's why we don't look at their current PE ratio. You look at the forward PE. But anyway, everything here is headed in the right direction. Phenomenal growth. Same with FCF, which is free cash flow. They print over $2 billion of free cash flow a quarter. And since they don't pay dividends, they're doing acquisitions and taking stakes into great companies like Grab, for example. If we go to ticker symbol Grab, the very largest shareholder is Uber. Look at that. Uber owns 13% of this entire company. Toyota owns 5.5%. What is Grab? They literally do the exact exact same thing as Uber, exactly what Uber does, but internationally. So this gives Uber instant international diversification. Look at where their revenue comes from. It's Malaysia, Indonesia, Singapore, Philippines. And, notice US and Canada aren't on there. So that was genius by Uber. And Uber has stakes in some other companies as well. So anyway, that's a great one to buy and never sell, Uber. And they're not even crazy expensive. Hey, what up, Professor O1? Good to see you. Rio Tinto, that's a great commodity play. What do you think about microcap DTSS? I don't love microcaps. Let's check it out though. Data C. Oh yeah, so we won't really cover this one. If you look in the top right, the market cap is 6.9 million. A 6 million market cap, it's just really not worth covering. The revenue's down 34%. They're losing money every quarter. Like when you lose, let's say $1 million, that's 1/6 of the entire company. So yeah, I wouldn't buy DTSS, sadly. Um, yeah, because even if they lose $1 million, that's ending for them. GameStop's another one I probably wouldn't touch. Let me see here. Qubits, IONQ, RGTI, really a fan of Grab. Yeah, hey, nice, Cruz. I do like. 25% of my portfolio is in semis and other CapEx tech, and that's after diversifying into utilities, healthcare, and defense. Hey, 25%, that's a fair. That's fair. What was this other one? BB. Oh, BlackBerry stock. Hey, we'll look at SanDisk and yeah, Celsius. You know what? We'll do Celsius, SanDisk, and ATRO. Remember to get to ATRO there, Treg. Trag. Sorry if I said your name wrong there. Tragones Fitness. What's up? Sorry if I missed some of these names here. I do want to get to all of them. So here's BlackBerry. They lost the phone war to Apple. BlackBerry is literally lower than it was in 1999. So you bought BlackBerry in 1999, you're down on your position, but they've pivoted the whole business model. Let's see right here. BlackBerry QNX expands developer ecosystem with 12,000 non-commercial licenses. Vector for software vehicle deployment. Well, let's actually see right here. What do they do? QNX. I'm not too sure what this is, but it is up 10% year over year after going 13% in secure communications. So that's down 10% year over year. So nothing's really blowing me away. Oh, they are really profitable now. So this is true. They really did. They lost a lot of money back here, but now the actual business is making net income every quarter. Revenue's down 1% after it fell 5%, after it fell 10%. So the revenue's really choppy, kind of slowly going down single digits. Maybe that's why the stock has, been flat for such a long time. But anyway, 34 forward PE, not super cheap, but at least, they're profitable. They really are fixing their margins. Oh, and Fly versus Rocket Lab versus ASTS, which one's more profitable? Rocket, well, in terms of profitability, none of them are profitable. Hey, Tingrika, no way, with the huge gift there. I really do appreciate that. I hope you're having a great day. Yeah, we are finally back. We try and be streaming every day. So someone said SNDK, this is your memory shortage play. They're the best performing stock in the S&P so far this year and last year. But this stock is probably going to go higher. That's the crazy thing about SanDisk. And here's my reasoning why. After they hit an all-time high, literally all-time high on Friday, here's why they might continue to climb higher. If we go right here to the company's forward PE ratio, it's a 22.7. Literally, that's not a nuts valuation, a 22.74 P. There's so much massive growth expected. Like basic metrics, the earnings before interest, this quarter was 176 million. Next quarter, it's supposed to be 630 million and then 740. Same with the EPS. The EPS just next quarter is supposed to be $3. That's $12 of EPS a year on a $377 stock. So yeah, they're really trading at a 22, 23 forward PE. So this is because of the memory shortage. Memory prices are booming. It's Micron as well. Micron's been a great one. But that's why if I was a shareholder, I probably wouldn't fully sell out of my position because the forward PE implies that it might just go higher. All right. You're okay with BlackBerry, but not GameStop? No, I'm really not okay with BlackBerry. Yeah, I really wouldn't touch BlackBerry. But we can check out GameStop too. Yeah, GameStop, this one you're not really buying for the fundamentals. You're not buying them for the the movie theater industry. You're buying this because you hope Roy and Kitty tweets something. It's more of a meme stock. They did just buy a bunch of Bitcoin. Here's kind of the one also kind of cool thing. They have like, I believe, 4 billion of net cash. So if you go to their cash in the top right, they have 8.8 billion of cash. And so 8.8 billion in cash and total debt of 4.2 billion. So around 4 billion of net cash. So if you go to the market cap, it's 9.5 billion. So literally 40% of GameStop is just their net cash on hand. But yeah, you're not buying them for the fundamentals. Obviously, like the revenue's down 5% after it fell 20%, after it fell 20% again, after it fell 9%. So, you're not buying GameStop for the fundamentals of the core business. And GameStop as well, sadly, one of the other reasons why they have so much cash on hand is because they dilute the life out of you, and the EPS just shrinks because of it. If we go right here to just the total common shares outstanding, you've been diluted year over year 35% after being diluted 43%. So in a way to think of it, like, you own 70% less of the company than you did before, but that's how they rose so much cash, but it's just crushed the EPS. But anyway, GameStop, you're not buying that to hopefully to outperform the S&P 500 in the long run, but it's a nice maybe swing trade kind of stock there. Oh yeah, Celsius. Let me get to Celsius right here. And should we get to the quantum names? I don't really like any of these quantum names, sadly. Like Qubits, RGTI, they're really tough buys. Is it too late to buy to SanDisk? The risk reward is kind of tough. Yeah, really, I wouldn't buy it at this risk reward. Hey, and Catherine, didn't you have a stock? I'm sorry if I missed that one. What was that one? So here's Celsius stock right here. This is that energy drink company. They have a 22% market share for all energy drinks sold in the US now. They own 3 main brands. They own Celsius, Alani, and they got Rockstar Beverage. So if we go to their revenue year over year, part of that reason there's triple digit revenue growth is because of the acquisition. They spent $1.3 billion buying Alani. Yeah, Alani's still a shareholder. Alani owns 8.7% of all the shares, but it's under Celsius' stock now. That one's growing like crazy. They record profitability quarter. They did 166 million of profit this quarter. So they actually had really good margins, yeah. But they had a one-time adjustment because they're moving their manufacturing and distribution to Pepsi. Pepsi now owns 8% of Celsius, which is a great partner. So Pepsi's an 8% shareholder. Pepsi is in exchange gave them Rockstar Beverage and is going to do the distribution for Alani and stuff. So it's an interesting growth name at a 38 forward PE. That's not crazy. 22% market share for energy drinks. And look at Monster Beverage, like biggest competitor. This stock is an absolute monster, one of the best performing multi-baggers in history. Monster Beverage is like literally at an all-time high on Friday, and they're at a 35 forward PE. So it's kind of like the same PE ratio, and they're paying for the same growth, and there might be more growth on Celsius. Okay, actually, I do like Celsius. SanDisk profit margin is negative, no PE because it's negative. You look at the forward PE for SanDisk because the PE, we just saw that the orange line, they're expected to print money next quarter. What was the semiconductor ETF you mentioned earlier? That was ticker symbol SMH. What up, Carlos? That was SMH, the Van Eck Semiconductor ETF. Yeah, if you don't know which semi name to buy, and like if you bought this ETF like a year ago, you unknowingly bought like part of the memory shortage, like Micron right now and SanDisk are both in this ETF right here, and it's led to a lot of the performance because Nvidia has kind of been flat for a little while, but these other names have really picked up this ETF like from the memory shortage. So yeah, SMH is a cool ETF. Probably tough to buy now, but the next time there's like a retracement and like a bear market, you can then add to that one and just have it on the watch list for a while. Monster the King. Hey, what up, 6-star? MSBHF. I hope I can find this ticker symbol for you. Mitsubishi. I can't find that ticker symbol on this brokerage right here. Maybe I can't view it because I think they're like a Japanese name. So what do you think of silver? Hey, what up, Jace? Good to see you, man. Thanks for going to the YouTube stream. Yeah, so silver, this is your basically precious metal commodity. Silver has been booming, and there's just so many reasons for it. I've nothing bad to say. I mean, it's tough to buy if you wanted to buy silver for the first time. It's definitely tough, but maybe it'd be a good time to sell some silver. Trim a little bit of profit. You got any silver change, silver jewelry, gold jewelry? These precious metals are at all time highs. The Fed's printing money again, 60 billion a month. There's other, banks are buying silver and gold like crazy. Other countries like the BRICS currency is pegging them to like these rare earth minerals, and the currency actually has value. And anyway. Yeah, my battery's running low. Wait, we've been streaming for nearly 2 hours now. My battery holding up strong. Hey, what up, Plasma? COUR. What is this one? Bloom Energy. Actually, let's get to Bloom Energy. This is another one that's kind of has great forward expectations. I mean, it's wow, they were up 10% on Friday. Let's see what these expectations are. So the revenue year over year is going to go from 326 to 427. And they had a massive beat this quarter specifically. They expected 428 million. They did 520. So no wonder they gapped so much on earnings day back here. So the expectation next quarter is 640 mil. That'll be a record. Let's see their revenue. 640 mil. Yeah, it's never even been close to that before. So that's going to be an insane record quarter. And they're going to have positive EPS on that. So it looks like they're just now getting net income positive. So we really don't want to do like a forward PE. You really didn't want to do like a 2 or 3 year out forward PE on this one. But 14 cents of EPS next quarter. That'll be good. Yeah, they beat like crazy on revenue this quarter. So there's just a lot of future growth. I don't know what this company does exactly. Engages and installs solid oxide fuel-based power generation platform. So I think they make like these off-site modular like batteries or microgrid, off-grid battery systems. So some sort of that's probably in a lot of demand right now from the whole data center utility demand right now. So there you go. That one's I wouldn't probably buy it at this price, but there's great future expectations there. Okay. Which one should we look at here? Mr. Phil said WREE. I typed in WREE. I could not find that one. SKYT. Is that Skywork Tech? Or Skywater Tech? Actually, this is a different company than what I thought. So let's go see what Skywater Technology is. They've had a great rally. They're small. They're worth $1.4 billion, but they are in water services. That quarter over quarter, just like something happened there. I don't know did they do an acquisition? Let's check. They did. So that probably what was the reason there. So they bought a company for $100 million. So that's why the revenues expectations are so good. So yeah, they had actually, this was a great, I'm so stupid. I'm saying water. It says wafer. It says wafer, not water. Okay. But the company is called Skywater, so it did confuse me. Okay, time and materials cost, fixed price contracts. So anyway, I guess the real growth here is this wafer service that just boomed, I guess maybe from some acquisition. Expectations are good as well, and they're not losing any money really. Well, let's check the EBIT for a better. Yeah, I guess, yeah. The earnings before interest this quarter was phenomenal. So maybe this really is some accretive acquisition. I don't know. Hopefully that was somewhat hopeful there. I probably keep the allocation of that one small. But they just did some acquisition that looks interesting. Looking for some 2026 stock deals. Hey, check out the beginning of the stream. This is what I thought was pretty attractive. We look at the S&P 500. The S&P 500 literally hit an all-time high. This chart looks beautiful. So then, it's tough. You can't really buy the S&P 500 at right now prices. So what looks attractive? Here's some stocks. I'll go quickly. I'm not going to analyze them, but we did that at the beginning of the stream. By the way, if you want to see that, my YouTube channel is called Nathan Roberts, and the link tree in my bio, but you can just type into YouTube Nathan Robert, rewind it. But Microsoft, I think, is at a great deal at a 28 forward PE, well off all-time highs. TradeWeb is an interesting one. We did a deep dive on this one. I think this one's very fascinating. TradeWeb. Southern Company is a bit of a higher yielding one. You get a 3.4% dividend and around 3% stock price appreciation. You should get around 7% of your money back a year with that one. Progressive Corp, it's an insurance company. They do special dividends. I got 4 shares of them. There's our line. We're definitely down on our position. We bought at 246. It's 215, but an 11 PE on this company. They're trading at 11.4 times forward PE. Like, check out the revenue. The revenue is so consistently just up and to the right on the revenue, and not just the revenue, but now the bottom line. They used to struggle with staying net income positive back here, but we all know insurance prices, and they now print 2.5 to 3 bill of after-tax net income a quarter. And at this growth rate, what's it going to be the same time next year? So hopefully that's a new one you could put on your watch list. I do own them, so I'm biased, but I own them because I like the fundamentals there, and they pay the nice dividends. So yeah, there's our position. We're down $122. All right, let's look at some more of y'all's stocks here. I'm buying VRT, Marvel, Arista Networks. Actually, yeah, VRT, that one's an interesting one. This is Vertiv Holdings. And just from a forward PE metric, check this out. Oh, actually, the current PE is a 61, but the forward PE is a 35. This is your liquid cooling infrastructure play. There was some bad news around here. So this is NVIDIA tweeted, the NVIDIA's CEO tweeted this. NVIDIA's new chip, Rubin, may impact their chiller business. Because, Jensen Huang tweeted that their new Rubin platform doesn't need liquid cooling. But then there's some analysts that said this right here, like the liquid cooling market's supposed to CAGR very nicely through 2030 still. So, the forward PE is net income supposed to double. They've been beating on expectations every quarter, beat on revenue, beat on EPS. They expected 87 cents. They did $1, and they beat on EBIT. So not just some adjustment that they had, like they really are beating on every expectation. The revenue growth is great. It's going to go from 1.9 to 2.54. The bottom line is just, they're really profitable. So I really like VRT, kind of like a liquid cooling infrastructure play. Microsoft interesting for a big buy for me. Yeah, it's like such a safe company. If you just buy a share of Microsoft right now, I bet just for the rest of time, you should just get 7 to 10% of your money back every single year at current prices. The forward PE is a 29 on Microsoft. For Microsoft, the software behemoth, their software business does over 120 billion of annual revenue, and look at the trend. It's just crazy. They also have this Azure cloud business, which also does over 100 billion of annual revenue for them. Microsoft literally keeps to their bottom line after tax net income every quarter, 25 plus billion of net income a quarter. At a 28 PE, Microsoft's a steal. And they're investing in AI. They got Copilot. I think they have the right to buy 49% of OpenAI. Hey, what up, good luck givers? Good to see you. Happy New Year. I hope you're having a great day. Let's see here. Microsoft, Amazon looking the best. Yeah, Amazon and Google have had a great start to the year. Really, the interest rate sensitive stocks, there's probably a lot of different people's portfolios in here. There's like what worked last year hasn't worked so far this year. That's why some people's portfolios are up like crazy, up like 10 and 5% year to date, and others are kind of flat because the interest rate sensitive names have been moving so much. Like United Rentals is up 15% year to date. I think Carlisle Group is up 9% year to date. The home builders, like a Home Depot, a Lowe's, they're all booming right now. The REITs are doing great. Like the Iron Mountain, we're finally seeing some life come back to Iron Mountain stock. That's the chart that all these have kind of seen. The dividend names, the kind of like the higher yielding dividend stocks of what have been going up. My newest position, CHRW. They hit an all-time. I do this all the time. I never mind buying stocks at all-time highs if they have the fundamentals of what I think is a great stock, and because I just think they're going to continue to climb to all-time highs. Because people probably call me crazy about the stock at an all-time high, but I just think they're going to continue to climb higher. I did the same thing with Cavco and Powell Industries and some of these other names. Like I bought the stocks on days when they're literally at all-time highs, but actually, here's a fun little stat. Whenever a stock hits a 52-week high or an all-time high, statistically, this literally shows it's statistically followed by a cluster of new all-time highs. But the same is also true in the other direction. If a stock hits a new 52-week low, all-time low, it's statistically followed by a cluster of newer all-time lows. So it's kind of just simple, but anyway. Let's look at some more over Alphabet. Hey, Alphabet's that's my second largest holding, and it grew to that position. Alphabet, I just made a video on my YouTube channel called Analyzing Every Mag 7. I'd really appreciate it if y'all check that video out. But Google's cheaper than Amazon. I mean, even though Google's at an all-time high in terms of growth, they're at a 30 PE. Google, even though they're at all-time highs, is cheaper than Apple. It's cheaper than Amazon. Obviously Tesla. But yeah, Amazon 32 forward PE. All the Mag 7 are fairly valued. That's what you'll kind of see in the video. All the Mag 7 are fair. Alphabet, Microsoft's a super steal. Actually, out of all the Mag 7, Microsoft might be the best deal right now if I had to pick one. Amazon plus Netflix, both very cheap. Let's do Netflix. You know what? We haven't done them yet on the stream. Netflix is one that I think might be worth starting to nibble on because Netflix forward PE is a 28. Now, this excludes all of the shenanigans around the Warner Bros. Discovery auction, which the price keeps going up, and that's going to be even more decretive to the EPS. But excluding all the nonsense, assuming they never bought them or are not going to, the forward PE is a 28. And a 28 PE for a safe business like Netflix, I think is very fair. I know they're kind of being boycotted right now, but Netflix, a lot of people would cancel their subscription last. And if we go to their bottom line, Netflix easily makes $2.5 to $3 billion of after-tax net income a quarter, after they pay their couple hundred million taxes a quarter. So they literally print $2 to $3 billion net income a quarter. Same with free cash flow. That's what FCF stands for. Subscription model company. It's very predictable. They have 300 million premium subscribers. They make on average $11.69 per month per user. That's a really cool metric, the cool KPI data we get here. But anyway, Netflix is just a safe buy and never sell, in my opinion. I'd start to nibble. If I wanted this as 5% of my portfolio, I wouldn't make it 5% yet, but I maybe would make it 1% because it's a great business. They really print $2 to $3 billion net income a quarter like that. And they don't pay a dividend. So since they don't pay a dividend and don't really do buybacks, that's how they're able to afford this $82 billion merger with Warner Bros. Discovery. So Netflix and AMC partner for Stranger Things finale. They also had like a record Christmas Day viewership of the NFL game or something, Netflix was saying. Anywho, Netflix is a cool one. I have some silver exposure via the gold miners like Barrick's Gold. Yeah, ticker symbol B or Barrick's Mining. If you don't want to buy, the actual commodity of gold, you can buy these like gold mining companies where usually you get a nice yield. So yeah, you kind of like get exposure to the upside of gold, like this one has followed the price of gold and silver, and you also get a little dividend in the meantime. And that dividend is always historically, if you bought this stock basically before the massive rally, you had a 3% dividend, but since the stock has gone up so much, it pushes the yield down. But yeah, like down here, you got a 2.7% yield in 2024, and your yield on cost is probably crazy, where you're basically just getting could get 5% of your money back. And wow, look at the bottom line. I mean, they're printing money. So yeah, some of the the actual commodity of gold. It probably will slightly underperform the actual commodity, but yeah, like ticker symbol IAU is the literal commodity of gold in an ETF. And it's almost always better to buy the ETF of gold over physical gold, because whenever you buy physical gold, especially in smaller quantities, you're paying that spot fee when you buy it, spot fee when you sell it. If you're buying a lot of it, you got to pay for storage. So this ETF with actually IAUM, actually super life hack, super life hack, buy IAUM. It's the exact same thing as IAU, just with a lower expense ratio. You get exposure to gold, and the expense ratio is a 0.09. That's crazy good. So anyway, kind of like QQQM, SPYM, they're all the lower expense ratio versions of it. Okay, why is Carvana going up so much? That one I don't understand. Well, hey, I'd love to explain it to you. Carvana, what's the CVNA? It's all because of the fundamentals, and it always moves the stock in the long run. The fundamentals and the financials explain why this stock went to $3, and it also explains why it's back at the freaking all-time highs, because they are so freaking profitable now. I don't know how, but I'll show you the numbers for yourself, and it explains why Carvana's done so good. If we check out their net income, Carvana's after-tax net income right here, it's phenomenal. I didn't believe it. They're making 200 to 300 million of after-tax net income a quarter. If we zoom out to, the stock a couple years ago, literally they burned all the shareholders, all the bondholders. This company was going bankrupt. Then they got some loan, saved the company. Like you wouldn't buy a company with this sort of numbers, car business, losing 500 mil to $1 billion a quarter. But now, just looking at judging them off their current numbers, this looks like a great stock. They're making a couple hundred mil of after-tax net income a quarter. They're super deleveraging. They used to have, the same, they had more liabilities than assets, but since they're printing money now, they can gain their assets up. So, and the expectations are up and to the right as well. They beat like crazy. This quarter, they expected $5 billion. They did 5.6. So, anywho, it's kind of weird. And what's the forward PE? So, yeah, I certainly wouldn't buy Carvana. But yeah, 45 PE. I think that explains why there was such a misprice. Like this, it was almost like for sure bankruptcy. But then now they're printing net income, and it was just such a volatile, rapid change that no one expected it. I guess if you bought the stock at $20, you could be up like a 2,000%. But yeah, Carvana is expensive at a 45 forward PE for questionable. I don't know how good that business is going to do, but I think that's why the stock has done so well. Okay, let's see here. Charge your phone. Hey, what up, Choco? Yeah, I definitely need to do that. Uh, hey, what up, Hammock? Good to see you. Yeah, hey, my phone's on 18%. The last little percent always hits different, always lasts longer. What's your portfolio? Well, hey, if you want to see my whole portfolio, do stuff. Hey, no way. Life Wonders. I didn't even see that. Life Wonders for the gift there. I do appreciate that. If you got a stock, give me a look at it. Let me know. I'll check it out for you. But yeah, actually, I haven't even done a stock portfolio update this whole stream. So yeah, I have more. Hey, we'll do ticker symbol S after this. Wait, Captain, do you mean ticker symbol S like Sentinel One? Oh, and Coinbase. Coinbase is interesting. So actually, let me get to Coinbase and let me know if you're talking about Sentinel One. We'll check out Sentinel One. But yeah, Coinbase, they are copying Robinhood's successful business model. They're getting into the prediction markets and they're getting into stock trading again. So anyway, this stock has usually been like a Bitcoin proxy. As you can see, I have the price of Bitcoin over it. It's not perfect, but they do sort of rhyme together whenever they go up and down. Yeah, it actually looks pretty similar. But Bitcoin's obviously outperformed it. But yeah, it kind of follows whatever Bitcoin does. But here's a cool little data we get. Oh yeah, we'll look at ticker symbol S after this. But yeah, they have not just monthly active users, but monthly transacting users of 9.3 million. When this exact same time last year, it was 7.8 million. So there are a lot of monthly transacting users. But yeah, I like that Coinbase is actually getting into the prediction market stuff, which will actually probably decouple them, which is great news. That's what happened with Robinhood. Robinhood also used to follow Bitcoin exactly, because most of their money came from crypto transactions. But then Robinhood got into prediction markets and they decoupled and goes up even crazier than Bitcoin. I think that might happen with Coinbase. I love the picks and shovels play. I don't know if they're a brokerage, but they'll be making money like a brokerage sport. I love this whole industry there, the picks and shovels play of crypto and the whole industry. I own Robinhood, SoFi, Futu, and I own Webull stock. I own all of them. So Coinbase is probably a 39 forward PE. That's not nuts. I mean, 39 forward PE is expensive, but they're investing a lot into the future. And I like where their prediction market stuff is going. Product, let's see, product expansion and market growth. So tokenized products could be big for them. Yeah, so Coinbase plans to expand into stock and ETF trading, prediction markets, and blockchain infrastructure. So they're getting into these other streams of revenue that they can take advantage of, because they're obviously like a pure crypto platform. So let's go to ticker symbol S. And no way, dude, I didn't even see that. Shout out to Cruz on the YouTube stream with the crazy $1.99 super chat. Can you do hymns? Let's do hymns after this. Yeah. Sadly, did y'all see the new partnership of Wegovy going on Amazon? That tanked hymns. And because it's kind of sad and crazy to say, but Amazon is basically a hymns in one. Amazon does exactly what hymns are. I don't know. Anyway, we'll check out hymns after this, because I like that hymns is diversifying away from the GLP-1 stuff, getting into like hormonal products. We'll check out hymns after this. And thanks again for that $2 super chat. I really do appreciate that. So here's Sentinel One. And hey, Tangrika, is UROY a good logo? Hey, we'll check that one out too. So Sentinel One, a $5 billion company. They're at an all-time low right now. So that's weird. They're at an all-time low. What is this company? New approach to network security, created the world's first specially built extended detection and response platform on artificial intelligence. Maybe we can check out their website right here. Don't just stop breaches, make sure they never start. So here's kind of their website. Looks like some sort of cybersecurity, maybe cloud companies, software names. So let's go check out the numbers because that's what matters in the long run. Actually, let's see. Is there Morningstar coverage on this one? Ooh, let's see. Bulls are saying SentinelOne has strong tailwinds as endpoint security projected to grow rapidly. That's true. Like I love cybersecurity, the industry. Singularity platform is it keeps improving, thereby making customer churn less likely, putting in greenfield opportunities without running into competition against the largest player. So yeah, Sentinel faces competition from CrowdStrike, Palo Alto Networks, larger, well capitalized. Anyway, they're not profitable yet. That's the one thing that does suck about SentinelOne. If we go to their net income, they're still losing, 60 to 80 million a quarter, but the losses are narrowing. Yeah, they lost 20% less money than the same time last year. Revenue's up 23, after grew 28, after grew 38. So they're actually on a streak of growth. Yeah, look at the top line growth at the top here. Revenue's up 23. So after massive growth. So yeah, actually that annual growth is what you want to see for companies. So it looks like some cybersecurity name so yeah, there's no forward PE yet. That's probably why the stock is still struggling because they're still not profitable, so we really want to see them get net income positive. But yeah, honestly, they looked interesting. Put them on the watch list as some cybersecurity name. We'll get to UROY and MLDM after this. Hey, what up, Red or Green? Sorry if I'm behind here. And Bo said Adobe. Hey, yeah, we'll get to Adobe. And shout out to Cruz again for the super chat. So here's HIMS. I think one of the reasons they fell so much on Friday is because Amazon added in. Amazon is selling, Wegovy on Amazon, and they used to sell Wegovy and Ozempic on Hims' website, on Hims and her website. They used to sell that, but then they ended the partnership with Hims, and now they're on Amazon, which is kind of weird. But they're now trying to get into their own. They used to sell these weight loss prescriptions for a really high margin, but now they're selling the same GLP-1 stuff or a different brand at a way lower margin. So the revenue's growing, but the profits aren't. That's the scary part here. So the revenue's up 49, like the top line growth is great. That's why I actually still like this one. Revenue's up 49 after 77, after 56, after 95. They're on an absolute streak of growth. But in the terms of the net income, and this is like really real, the net income is down 50%. But net income's down 80% year over year. The profits have really gone down. Gross margins down 7 after falling 5, and the net margins are down 2. So that's why I think this one, sadly, might be a tough buy, even on a dip. Because if we look at the forward PE, so this is using next year's net income, the current PE is a 59 and the forward PE is a 58. So there's not much EPS growth expected. So it's tough, but they're really growing and expanding into other markets like hormonal prescriptions, and they're increasing their online subscribers. They have like 2.1 million paying subscribers a month. Hims runs the risk of legal actions from big pharmaceutical counterparts like Novo Nordisk, as well as anyway. Here's the good news. Hims targets 1 to 2 new specialty entries every year. Yeah, so like with the testosterone stuff, an increasing shift to digital healthcare underpins long-term growth for Hims subscribers, expanding internationally, like Western Europe is growing, they're saying. So anyway, it's an interesting name, but they might not be worth buying the dip on yet, which is the sad part. I don't know if I'd allocate any new money to Hims. So yeah, that's I feel so bad. He donated $2 and I didn't have anything good to say about Hims. Yo, Cruz, if you got another stock you want me to look at, let me know there. Yeah. Hey, Red or Green, he says, how long will this run with shortage stocks? Here we have a shortage. The memory stocks. I think the memory stocks will keep on going up. So here's Uranium Royalty. So this actually, that's a cool name, Uranium Royalty. So what are their margins? Gross margins. So not exactly, but the revenue is really choppy here. Last quarter, it was 33 million. So they sold an asset. Okay, looks like they sold an asset to get that. Or I don't know, acquiring and assembling portfolio of uranium royalties. and investing in a company. So it's a Canadian company. What's the market cap on this one? 500 million. I'd be careful with that one. I mean, what was the other one? MDL. Oh, Medline. Okay, yeah, this is a great company. Usually when a company IPOs, what we've seen recently is a company IPO, then they tank like 50%. But I think the reason Medline isn't falling is because it's a good business and it's a fair valuation. They kind of do what Cardinal Health does. If we go to their net income, they're easily making 300 million of after-tax net income a quarter, and the PE ratio on that's a 25. So they're trading at 25 times net income. They have these supply chain solutions. They just IPO'd, so again, there's not too much history we get with this data here. Medline, that's up 9% year over year, but yeah, they're making 300 million of after-tax net income a quarter with a good balance sheet. So, yeah, I have no complaints about this one. I wish I had more data and analyst expectations to look at, but they just IPO, so that we don't have that yet. But they certainly are one of the better IPOs I've seen recently. IMRX. Let's check out IMRX right here. Regeneron, REGN. S does look interesting. Yeah, S might be an interesting one there. Um, okay. Wait, what link are we talking about? The Discord link not working. Really? I'm gonna test it right here. Okay, anyway, here's IMRX, Immune Engineering or something like Immuneering. I don't know. A very small one. If you look at the top right, they're worth $300 million. Let's check it out right here. So the whole company's worth $300 million. Let's see what they do. So, okay, so they're a startup. If we go to the revenue right here, there's no data. Yeah, so they used to sell something in 2022 and the sales went to zero. And then after it goes to zero, they don't report it down here. So now if we go up here, yeah, the revenue is zero. They're not expected to have any revenue anytime soon either. So it's kind of just a company that, dang, is losing, 15 mil in net income. That's 60 mil of net income a year. So they're losing 20% of the market cap every year just in net income. So it's a tough one to buy because they don't have any revenue yet. But I don't know what happened here. Maybe they got like some results of their prescription. Yeah, I wouldn't touch this one, sadly. I don't know. They lose a lot of money and they have no revenue. I just kind of avoid those companies. The ones that have literally no revenue, I just don't love those. You'd keep it as a very small position, maybe like a swing trade. The whole hormonal stuff is interesting. Seeing a lot of stuff on TikTok. Yeah, hey, I do think the testosterone stuff might be a nice growth driver. Chime has started to recover. Hey, should we look at Chime? What's the interesting there? Yeah, I think Medline has done its post-excitement dip and is going back up. Yeah, they have good fundamentals. So, all right, we'll look at a few more here, then I gotta go. VKTX. Yeah, hey, this is another kind of prescription name, and I think this one has. So here's what happened. This is kind of the whole goal for any of these like prescription products right here. They go up like crazy whenever they get FDA approval. So they have like good results of their prescription. Like this is what happened right here. That's why the stock went up so massively. They gapped up so much because they got FDA approval. They're finally about to sell their product, but hold on here. I think I just disconnected my phone. Oh, maybe the battery crashed me on this one. Dang, we've been live for 2 hours and 10 minutes. We've been having fun here. Oh no, so the Wi-Fi did just like crash on me. That's not good. Okay. Yeah, dude, the kilobyte upload speed just crushed. It's gonna lag for y'all for sure. At least we're 2 hours and 20 minutes in. If it doesn't fix, I'll just end the stream. But yeah, okay. It looks like we're working. We'll just stream till it doesn't work. Anyway, Viking Therapeutics, they got FDA approved. The stock goes up a bunch, but now they still haven't sold anything. We go to the revenue, it says no data. They still have not sold anything, and they're not expecting any revenue anytime soon. So that's why I think Viking Therapeutics has just slowly bled out since the day They like got their FDA approval and had successful results. They've just been down ever since because it's been literally 3 years and they still haven't sold anything. They're still like development phase. Luckily, though, this company still has a lot of cash to burn. But notice the trend of their assets and their cash. They always have no debt, but their assets keep slowly depleting down more and more every quarter because they're losing money every quarter. When you lose net income, that money has to come from somewhere. So it's just coming off their cash pile, going more and more negative. So we really want to see this company finally start to sell something pretty soon. Yeah, hey, we'll get to that one in a minute here. Try not to spam. Oh, IDK said, what about Reddit? I am almost certainly, I think Reddit is going to get added into the S&P 500 this year. I think they're the largest market cap US name not in the index. They're a $46 billion company. I think this stock is going to $300. I wouldn't buy it today. Certainly, I wouldn't buy it. But if I was a shareholder, and I am, I wouldn't be selling out of this one. I really think Reddit's going to $300 as a get S&P 500 inclusion. I don't think there's enough shares outstanding, so they're going to have to do like a stock split. And if they announce a stock split, that's almost confirmation they're getting into the S&P 500. Reddit in discussions with major tech companies for AI data licensing agreements. So that's kind of what they have right now. They have their normal advertising business, but they have this other section of revenue that's all 100% margin where they're getting revenue from ChatGPT and Google Gemini as it's training their models. But this is why a lot of people think Reddit might be a meme stock, but this company is no meme if we judge them off their fundamentals because they're great. The revenue's up 68%. After grew 67, after grew 25, like they're on an absolute streak of growth. And not just revenue, but profitable growth. They're the most profitable they've ever been. 160 million net income this quarter. Check out this balance sheet. Reddit has no debt at all, literally no debt whatsoever. $2.2 billion of cash on hand, and their cash pile just grows every quarter. The free cash flow grows like crazy every quarter. So, and they look at Reddit's gross margins, 91% gross margins, takes nothing to run the company. Your ROAS, your like return on ad spend on Reddit ads are like the best out of any platform. Like because they just started this and to get a lot of money, like you get such better returns like doing a Reddit ad right now than like a Meta ad. So anyway, Reddit, phenomenal growth stock with no debt. No analyst, I should have shown the analyst expectations. No analyst expected how growthy Reddit was going to be, and like just this top line revenue growth is up and to the right. I am a shareholder, so I might be biased, but yeah, I got 4 shares of Reddit. We're up a good chunk on them. Chime, we'll just type in Chime. I typed in Chime. Yeah, it said Chime, or I can't find that one. I did try and find it. APLD expected EPS of 48 cents, but didn't lose money this quarter. Hey, nice. Should we look at that one? Give me the ticker symbol for Chime. We can check that one out too. 6-star. And Adobe. No, hey, actually, no, we got to get to Adobe. I meant to get to that one a long time ago. Let's do Adobe. And Louis Vuitton stock is an interesting one too. The luxury market is kind of struggling right now. And hey, Irvin, I didn't see that. Thanks for that gift there, Irvin. And we got to get to AEVA. Remind me to get to that one too. So here's Adobe. Adobe, this is one of the software names kind of being hurt by the AI thesis. Like they're saying in 10 years from now, will we need Photoshop? Will we need After Effects? Because maybe you could just AI generate a great logo or AI generate whatever thumbnail or art that you need. And but that's really hurt on their PE, but the fundamentals are still great on Adobe. They trade at an 18.8 forward PE. I'm on an Adobe product every day. I'm on Photoshop and After Effects every day for my YouTube videos. If you want to support me, the only way to is subscribe to my YouTube channel. It's called Nathan Robert, link tree in my bio. But yeah, they have great subscription revenue that makes subscription revenues up and to the right. It's $5.99 billion. They have a big backlog of $22.5 billion of money owed to them. And they're beating on expectations. Like, check this out. They beat on revenue, they beat on EPS, and they beat on EBIT. Triple beat. They're printing $1.8 billion net income a quarter. What is this app? Yeah, hey, this app is a brokerage. It's in the link tree in my bio, very first link there. If you want to use my affiliate link, broker called Moomoo. But yeah, they're making $1.8 billion in net income a quarter. And what is Adobe doing with all that money since they don't pay a dividend? Well, they're doing massive share buybacks at the best time ever. They're doing $2 to $3 billion of share buybacks every quarter. So if we go to the net income is up by 10%, but the net income per share is up by 17. Again, the EPS growth rate and the net income growth rate should always be the exact same. This is a quick way to tell if a company bought back their own shares. If the EPS growth rate is higher than the net income growth rate, they bought back their own shares. And whenever they buy back their own shares, it makes the EPS go up higher, which makes the PE ratio go lower, gives you more ownership in the company, it makes the cost of the dividend go down, and it just makes the stock go up. So anyway, expectations are up and to the right. That's why I actually do like Adobe, and I think it's worth buying at their current prices, but as a little bit, because we don't know what's going to happen with this AI thesis. But I do know, an 18.8 PE, that seems fair to start a nibble. I do think it'd probably be worth starting a small position in Adobe, but don't have it as a big size position. So, we find it. It's my CHYM. We found a Chime, and then we'll look at Louis Vuitton. That's a cool one. We haven't looked at LVMH stock in I think literally 6 months. That one's crazy. I like it more than Nike. So here's Chime Financial. I think they're like a buy now, pay later company. I believe. Oh, they just IPO'd, so we don't get too much data, but we can see the expectations. Whoa, the revenue is going to go from 528 to 633. So revenue is supposed to go up and to the right. There's really going to get close to net income positivity. So yeah, they had their one-time IPO fee, so you can kind of ignore that negative $900 million quarter. But looks like they have a great balance sheet as well. Looks like they just have great expectations, and this whole industry is kind of doing really good. If we look at an Affirm, the bigger buy now pay later name, they've also been doing great the past year, or they just got super net income positive, which is good for Affirm. I think they're partnered with Amazon. So Adobe looks nice. I love the buybacks. Yeah, I do like that one. Let's get to I never got to APLD. Applied Digital. Wait, what did he say about Applied Digital? APLD expected an EPS of negative 50 cents, but didn't lose money this quarter. Let's actually check that out. Yeah, this is what was so crazy about this quarter. Then we'll look at Louis Vuitton. The reason why this stock, I think, has done so well is because they had great earnings. Check out what the analysts expected, that orange line. They expected 82 mil. They did 126 mil. They beat last quarter as well. They expected 45. They did a 64. And what does this company do? They're like a data center hosting business. So high performance compute hosting, basically cloud hosting, data center hosting. So they basically have a bunch of data centers, a bunch of GPUs that they're renting out the capacity to. So anyway, which is in such demand. NVIDIA also owns them. NVIDIA does have a stake into them. So LVMUY, here is your Louis Vuitton, Moet Hennessy. They own a lot of brands, Hennessy, I guess, like the drink. So anyway, this is a pretty fair company, way cheaper than Nike, a 27 forward PE. And I like them more because you're more diversified into a lot of higher margin products. So obviously fashion and leather goods, think about the purses, like the Louis Vuitton bags, but then they have these other higher margin products like the watches, the jewelry, the perfumes. Perfumes could have a high margin, wines and spirits, like the Hennessy. So anyway, I like how diversified that they are. And if we go to their bottom line, and they're a European company, so let's convert the currency to USD just to get a slight better picture. So yeah, they don't report quarterly because they're a European company, but for the first half of this year, this is in USD after-tax net income. Obviously people were spending their stimulus checks like crazy in 2022, 23 on bags. The net income has fallen, but still they're making... Hold on. We got a TikTok saying I'm AFK here. I'm not though. Okay, we're back. Sorry if it went away for a second. They said I was AFK, but I'm back. But yeah, this is a great one. They made $7 billion in net income. They're going to make around $15 billion of after-tax net income for the full year. So yeah, this they're acquiring this other business, but they're buying all the revenue from it, but they're letting the owner of it be independent. I forget the new brand that they're buying. They acquired some really luxury company, doesn't matter. A Givenchy CEO they just hired or something. I really don't remember what it was. But anyway, I just really like this one. It's your exposure to watches and jewelry and perfumes and these high margin, products that people buy. So yeah, luxury spend play. Here's where the revenue comes from. Only 23% of the revenue comes from the USA. So, hey, no way, Tengrika and who is that? Jackson with the crazy gifts, the mustache gift and all the roses. Dude, Jackson, thank you so much. And Tengrika, I really do appreciate all those gifts. No way. Yeah, Jackson, let's look at Marvel. I think that's a chip play. Thanks again for the gift. MRVL. So Marvel, oh, I cannot type. Okay, Marvel Technologies. So let's check this out. Thanks again, Jackson. I really do appreciate that gift there. So, yeah, I think what's the forward PE on this company? So the PE ratio is so a 51 forward PE. That's not exactly cheap. A 52 forward PE. But what are the expectations? Yeah, wow. Look at the expectations of the revenue. The revenue is going to go from 1.89 on the left to 2.28 billion. That's going to be a great year-over-year comp. They beat on EPS this quarter. Check that out. Analysts expected $1.37. They did 2.20, but then it looks like it's supposed to fall back to 34 and 38. But that forward PE of a 51 is using these orange numbers, and maybe like this quarter, if they beat 30% on the numbers, then the actual forward PE is way lower. We can just see the basic, earnings before interest, EBIT's going to go from 650 to 800 mil. So there's a lot of future growth, I guess, expected on this company. Yeah, so it looks like this was a little one-time adjustment, but look at the profits here. This is the impressive part. For the past 4 quarters, it just keeps on going up higher and higher, 300 million. But they're making 2 to 300 mil of after-tax net income. If we zoom out, they never were making money. They were always losing money. But now, like, the profits are really starting to show. The revenue expectations are good. So anyway, interesting. It might not be super cheap at a 51 forward PE, but maybe those expectations are wrong. So it's like a cheap semi. It's an interesting semi play. It is. And thanks again, Jackson. If you got another stock you may look at, let me know there. And same with Tengrika. Thanks for all those gifts there. I really do appreciate those. So, all right. Ooh, Tencent. You know what? I just made a short on this one. So, a YouTube short, not like I shorted it. This is my favorite Chinese stock of all time. If this was a US stock, they would be in the Mag 7. They would replace Tesla because this is a gaming behemoth. You ready? They own Riot Games, so they own League of Legends, Valorant, TF2. They own what's that called? Supercell, so they own Clash of Clans, Clash Royale, Payday, all those mobile apps, like they fully own it. They own PUBG. They own 49% of Epic Games, and they own Fortnite. They own a 10% stake in Snapchat, 10% stake in Futu, Reddit, Pinterest. They own a bunch of stakes in a bunch of different US companies that are great, and they're cheap. They traded a 21 forward PE. They print, this is in US dollars, 8 to 9 bill in net income a quarter. Tencent literally owns a little bit of everything. They're the largest gaming company. Like, I just love this one. They're deleveraging their balance sheet like crazy, and they have great financials. But a lot of people, and a dividend, a 0.73% yield, safe payout ratio with nice dividend growth. A lot of people just don't like this one because it's Chinese. It's an ADR, and I get it. And I don't own this one. And I actually might, high likelihood I'll own that company one day. All right. I like Sezzle over all the buy now, pay later stocks. Yeah, Sezzle, Dave, and I saw someone say SoFi earlier. Yeah, SoFi is a beast too. So yeah, Sezzle. This one's a cheap one at a 17 forward PE. The current PE is a 23, and the forward PE is a 17. The market cap is 2.6 billion. I'm glad this one has recovered because as it should, because fundamentals always will outshine in the long run. This $50 level is a great place to buy. But yeah, the valuation's cheap, and it has the growth. Like, it's not cheap because it's not having growth. It's having growth. And, revenue's up 66% on this 116 mil. They netted 26 mil. Like, they have already insane margins, 20 to 35% net margins. That's what's so cool about Sezzle, 70% gross margins. The gross margin grew 20% year over year on Sezzle. They're extremely profitable, deleveraging like crazy. Liabilities went from 75% to 57%. Sezzle's a great one. Every time I look at this one, I just get more impressed. The EBIT's just up and to the right. The EPS is going to be $1.20. That'll be a record EPS. It's never been $1.20 before. So, anywho, Sezzle is going to, in my opinion, continue to go higher. Probably fill this gap up to like 100. Maybe even $120, like in a year. Like, it could still, probably in 2026, you might get 30-40% this year on that. AEVA, what was this one? AEVA Tech, KVU Next, I think they're the Tylenol company. Yeah, actually, we'll look at KVU. I like Procter & Gamble more, but they're also a nice staple. But they're a bit of a dividend trap. I thing. So here's AEVA Technologies. They're up 17%. They're only worth 1.1 billion, but they had some great momentum on Friday there. Let's see what they do. So non-reoccurring engineering service. That's probably in such demand right now. Okay, so these numbers are very small. Okay. They're worth 1.1 billion, so that probably is why. So if we go to the revenue right here, it's really small, 3.5 million, but it is nice year-over-year growth rates. Revenue's up 60% this quarter. Last quarter's up 173, 50. But the bad news is, whoa, they lost 190 million of net income last quarter. And that was real. And look what that did to their liabilities. Their assets were already declining every quarter because whenever you lose net income, that money has to come from somewhere. So that's why their assets just declined every quarter. But then they lost 190 million. The liability spiked. So I'm guessing if we go to the cash and financing activities, they just had to dilute you. It's tough. It's tough. I can't really, I wouldn't trust much money in this one. But there might be some news that I'm missing here because they spiked up right here with crazy volume. They had a massive gap up on no earnings report. So maybe there was some sort of contract they got, military defense news. I don't know. So I don't know if I'd buy and hold that one forever. Do you have any basic tutorials? Yeah, hey, Papa, yo, by the way, yeah, I do. By the way, I sell nothing. I have no course, book, WhatsApp. I'll never follow you, DM you. I sell absolutely nothing. Watch out for people impersonating me. We already banned like 4 people in here with the exact same username and profile picture of me that's DMing people. So if you follow me, you might get followed by someone impersonating me. It's not me. I sell nothing. But only thing I do have is a YouTube channel where I have videos like you can look up on my YouTube channel, Nathan Robert, how I analyze a stock. I have videos on how I fully analyze a stock. And best way to learn is just watch the streams. I'm also streaming on YouTube. And you can rewind the stream on the YouTube. Sometimes I talk too fast. But the very beginning of the streams are really good. I go over like 6 stocks full in depth that I think are great buys. Like even though the S&P 500 is at an all-time high, these are like 20, 30% off and are still great companies. Some of them I own. So here's Kenvue right here. Yeah, this is a company that owns Tylenol. And they have been struggling a little bit. They own some other great names, like they own Neutrogena, they own Band-Aid, and like Tylenol too. Listerine they own. So yeah, they're in skin health and beauty, which is like the Neutrogena. Looks like, unfortunately, see, look at this. It's kind of declining single digits. It's down 3.17% after it fell 4%, after it fell 0.4. So that's on a decline. The essential health, that's now negative 3% year over year. And the self-care is also down 3.7. So that's not really what you want to see. Johnson & Johnson, this used to be owned by Johnson & Johnson, but they spun them off with a bit more debt than investor would have liked. But yeah, this is why they're cheap though. The revenue is super negative. It's negative 3.5 after it fell, 0.4 after it fell. So that's not the trend you want to see. And they have a bit of a really high dividend payout ratio. So here's their net income right here. If we average it out, here's their net income the past 4 quarters. They're easily making, we'll give them the benefit of the doubt because this is super generous, but 400 million of after-tax net income a quarter. It hasn't been that in the past 4 quarters, but let's say they make 400 million of after-tax net income a quarter. They pay a dividend, and here's the thing. The dividend costs exactly every quarter 398 million. So they have to make at least 398 million of net income just to afford the dividend. And some quarters they don't afford that. And that's the only thing that scares me is they're kind of a dividend trap because they have a 5% dividend, but the payout ratio just is a little too scary high for me. Like all their net income, all their profits are going straight to the dividend and they have no leftover money for themselves really to like invest in the future and stuff. So and the revenue's on a decline. So it's a tough one. That's why I think they're kind of at this all-time low level. But I heard like another company, was it Kimberly-Clark was trying to acquire them? I don't know. If you're looking for another great consumer staple company, because that one owns, you're buying them for like Neutrogena and Listerine and Band-Aid and stuff. Another just basic staple company is Procter & Gamble. Also on a dip right now, like it's the whole industry. But this one, they own Gillette, Tide, Old Spice, Pampers, very diversified, fabric and home care, baby, feminine, family care products, beauty products, healthcare products. So this is another one that I almost like as a better buy. And you still get a good yield, a 2.9, basically 3% yield, and a safe 62% payout ratio. And hey, Jackson, let's do super micro. I actually so sadly, you're not gonna like. Thanks again for all the gifts, dude. He left so many gifts, dude. Thank you so much, Jackson. Said super micro. Sadly, and Connor, remind me to get to IESC. I sadly just completely sold out of all my super micro computer shares. I sold it for around a 20% gain, but I don't like this one anymore. It's because of the margin compression is scaring me on super micro. They just sell a commodity to a very low margin commodity. We can actually look at this net margin if it load here. Yeah, here's their net margin, Look at their margin. It went from, 7% to a 3.35. They're giving these customers these bulk deals where they'll install all the chips for them. But yeah, look at the revenue. This already isn't good. The revenue is down 15% year over year. So the revenue's down 15, but the net income is down by 60. And of course, that means net margins are falling, which we just looked at. So the margin collapse here is the scary part, in my opinion. Gross margins are down 30. Wow. Gross margins are down 28 after they fell 21%, after they fell 11%. So, Dell is the better buy, in my opinion. They leveraged up a bit too. So I don't love what I'm seeing on Supermicro. And I used to be a shareholder, I used to own them, but I did just fully sell out of them. They are cheap though. Look at that, a 13 forward PE. Do they always so they do miss, they have missed on EPS the past 3 quarters. But if this is right, 43 cents of EPS, that's still good. That's actually going to be 100% year over year growth at the EPS if that's right. I know there's they really do miss on their metrics. Like they missed on EBIT by like 20%. So, and they missed big on revenue. They expected 5.8. They only did 5. So, but next quarter, I know like there was a bunch of AMD chip orders that might help them out, but they're cheap at a 13.7 PE, but the growth, like I can see why they're at a 13 PE because the margin collapse, but also there's the future. So it's a tough dilemma, a balance of 2 different things there. Hey, what up, Vish? He said VELO. Wondering what percent of return you recommend taking profits. Currently have multiple over 100%. That's the thing. I'm glad you asked that. One of my biggest regrets are actually selling out of great companies for a gain, like Robinhood. It made sense at the time. I'm up 200, 300%. So I'm like, let me trim most of my position. But that was some of the stupidest things I've ever done. Same with SoFi, same with some of these other names. Like my biggest regrets are trimming out and taking profits on companies. And when you want to sell out of a company is when you no longer believe that they're going to continue to climb higher and they're at some really stretched valuation. Like in this portfolio right here, like this stock, I'm up 176%, but the forward PE is a 34. I'm not going to sell them. One like Powell Industries, I'm up 365%. The reason they're probably not, they're going to go higher is they're at a 24 PE and over 10% of the market cap is just their cash on hand. Like they're still cheap. And that's why in this portfolio, if you look at the top here, this is called my buy and never sell portfolio, where once I buy a stock in here, I'm literally not allowed to sell any stock ever. If I'm selling it or if I'm trimming it, I have to fully sell out of it. And I don't really do that. So that's how this is going to look crazy. But on a return money weighted average, we are up 95% the past year. We did just as bad during the April dip. We were down worse than the S&P 500. But we did during this April dip? We bought it. We bought the dip. And that's the reason we're up so much is because, we bought Comfort Systems during the April dip down here. We haven't trimmed. We haven't sold before today. Same with like an Amphenol. We're up 105%. And I wouldn't trim a lot of these. So it's really when you lose belief in the company. It's always safe to trim a little bit, but never fully sell out. Because if I fully sell out of these, I'd be so sad, like SoFi and Robinhood and Reddit. Like I just want to diamond hand these for the rest of the time. Well, look, dang, we've been live for almost 3 hours now. I'm going to look at a few more, but my head's starting to hurt. Let's see here. Is VELO a stock? VELO, he said. Velo 3D. Wow, it's at an all-time high right now. So congrats if you own this one. They're a small one. They're only worth $490 million. That's an extremely small market cap, $490 million. So they do 3-dimensional printer sales. Okay, so they sell 3D printers. That's kind of a commodity. So do they have a net margin? No. Dang, they actually are losing a lot of money a quarter. But revenue's up 65. So I guess if you want exposure to the 3D printers, I mean, or what are they doing with 3D printing organs? Or is it just like some normal 3D printer? Let's go check out their website right here. Purchase a printer. Um, Trusted by the world's best companies like Lockheed Martin. So I don't know, some sort of 3D printer company. They got 105 employees. Hmm. Maybe there's probably a lot of momentum around this name right now because the 3D sales, I mean, it's not too impressive. Nothing super blowing me away there on that one, but it's certainly niche-y and interesting. Can you do a review of Powell? I almost want to buy Powell, absolute monster. Yeah, Powell Industries. I love this stock right here. So you know what? Yeah. So if we look at the market cap, they're worth $4.4 billion. Remember that the whole company is worth $4.4 billion, and they have $475 million of cash and no debt. So well over 10% of the market cap is just their cash on hand, even at all-time highs. But look at this, $475 million of cash. That isn't just sitting there doing nothing, they're earning interest on it. So they made $4.3 million of interest on their cash. And guess what? Powell pays a dividend, and the dividend only cost $3.3 million. So they literally make more interest on their cash than the cost of their dividend. So this dividend is basically free. You get a 0.3% dividend. What's super cool is, I'm up 4x on this one, so I have an over 1% dividend yield on cost on this company. But yeah, anyway, so the dividend costs $3 million. They're making $4 million in interest, but if we go to their net income, they're easily making 40 to 50 mil of net income a quarter. So there's so much room they have to raise their dividend. They're just choosing not to. They're doing the smart thing. And even more cherry on top, they have a massive backlog, literal like a $1.3 billion backlog of orders. So 25% of the market cap is their backlog, 10% of the market cap is cash, then another 8% of their market cap is their just inventory sitting there doing nothing because they have no debt. So that's why I'd be stupid to trim Powell Industries even at an all-time high. So anyway, that's why I own that one. They're just a monster. So that'll or look at Roblox here, RBLX. So let's Kathy Wood does own Roblox. This one's been a set performer, and I think I know why. What app is this? Yeah, hey, by the way, this is a brokerage right here where you buy stocks on if you wanted to get this app. It's in the link tree in my It's in the link tree in my bio, the very first link there if you want to use my affiliate link. If you go and deposit $100, you'll both get some free stocks. But yeah, my favorite app to buy stocks and analyze them on too. You can buy, by the way, all these apps are all in the link tree in my bio. Robinhood's the second link in the link tree in my bio. Another brokerage, they all send you a tax form. But this one right here is completely free, no commissions. You get a 3.35% APY on your idle cash and the best analysis tool. So anyway, very first link in the link tree in my bio for this app, and then Robinhood's the second link up there. Or you can just type it into Google, a broker called Moomoo. But let's look at Roblox as like our last one here, one or two more. So I think I know why this one has been slowly bleeding out, because actually, let's see if there's any news down here. Roblox implements global age verification system for chat. I guess that's good. But this is the really good news, something really impressive. Hey, Goku, thanks for the 4 roses and the kind words. I appreciate that, Goku. Thanks, man. But check this out. This is and I don't know if this is AI bots, but this is really impressive. Their daily active users just quarter over quarter went from 111 million daily active users to now 151 million daily active users. That's a really cool metric, and I'm assuming it really is true because the revenue's up 50% year over year. But here's the bad news and why Roblox, sadly, I think is kind of unbuyable as a stock. If we go to their net income, they lose a massive amount of money. They're losing like $1 billion a year. They lose 250 mil in net income a quarter, and it's not necessarily narrowing. The losses are slightly getting worse, and they're really leveraged. They have the same amount of liabilities as assets. How do you pay off these liabilities when you lose 250 mil a quarter? That adds on to your liabilities. So, and all the net income is directly coupled with the stock-based comp. You look at the free cash flow, you're like, hey, this is great free cash flow. But again, free cash flow doesn't include non-cash expenses like stock-based comp, which is, they're paying employees with stock and they would have had to pay them with cash. So that's why you always look at GAAP and net income where you kind of blend the metrics. But it's hard to trust Roblox, but there's some really good news. Like the daily active users are growing, the revenue's growing, but I really don't like those net income losses. And that's why I think this one, I wouldn't touch with too much amount. I wouldn't have as a big size position. So, what was this other one I wanted to get to? Powell's great for corporate finance, yet investors' dividends should be over 3%. Hey, what up, Edwin? Yeah, Powell is, you know, the stock price appreciation is made up for the small dividend. Um, they're not doing really even any buybacks. But yeah, they have a lot of daily active users there. Oh, Marcus, hey, we'll get GILT. We'll maybe get to that one. I'm trying to, if one person says a stock or there's some new people, I want to try to get to the new people stocks before I look at like someone's third stock that they requested. So sorry if it looks like I'm ignoring some of these comments, but I try to get to the people who've never been in here stocks first. Oh, so here's gambling. Oh, I can't even say that word on. The stream goes down. I just looked at the name at the top here. So this is gaming.com. Okay. I shouldn't cover. The stream's going to get taken down every time I cover this industry. So yeah, we're actually not going to cover this stock, but this is the industry that they're in. If you look really quickly, they're in this industry. Are they making money? Let's see. They're making net income. So well, they were, but now it looks like the profits the profits are going down a bunch. So the margins are compressing. Did they like buy something? So they bought a company for 70 mil, and maybe that's why the margins are squeezing. But yeah, look at they missed on revenue this quarter, but the revenue is supposed to go up to 50 mil. Yeah, they missed on EPS these quarters. So they're actually probably a cheaply valued company, a 7 forward PE. Wow. But I think this industry is so competitive, like sports and that industry, another great way to get exposure to that is it's like a Robinhood stock, with Robinhood's prediction market. Like I love the picks and shovels play. Like that's why I think MGM or DKNG, that stock, if you know what that is struggling so hard because like they just got a lot of competition from Robinhood and Webull now, and Coinbase is getting into prediction markets. So, yep. I hate stocks that pay dividends, just suffocates most companies. So that actually, I love companies that pay dividends, but only certain kinds. This is what I focus on specifically in my portfolio. And if you look at the top here, this is called my dividend only portfolio. Every stock in here pays a dividend, but I look for what I call them dividend growth companies, where the dividend really the dividend, they pay it for fun with some extra little cash they have on the side. Like Google, they have you want the dividend stocks with extremely low dividend yields and extremely low payout ratios, because in 10, 20 years, because if you don't need the dividends right now, like me, in 10, 20 years from now, the dividend income will be so significant in the dividend growth where it's just like you bought a realty income with your original money. You should look at every stock like it's realty income, like where realty income pays you 5% of your money back monthly. Every stock is just like that, except they don't pay you monthly and in dividends, but they do better in stock price appreciation when you add that in. So I look for the companies with low dividend payout ratios. Actually, if we look at this portfolio, every stock in here pays a dividend. Every single one of these, even Google, Meta, and every single stock in here as well pays a dividend. But the only stock that doesn't pay a dividend is Amazon. It's never a deal killer if they don't pay a dividend, because Amazon is so innovative. They spend $30 billion a quarter buying new assets, where it's just like instead of paying dividends, they're just buying companies with it. Like the M&A is just as good. I mean, like Comfort Systems was a crazy dividend growther. Okay, let's see here. Okay. Yeah, companies, I love companies with low dividend payout ratios, because that leaves them so much room to do buybacks and reinvest in the company and buy new assets without having to dilute you as a shareholder. Because the companies with high dividend payout ratios, if they see an opportunity and want to pursue it, they either have to issue shares or issue debt. So that's why I love the companies like Google. Do you auto reinvest the dividends? No, I always manually reinvest the dividends, but I do like the drip. I just pay attention to stocks so much that I just like manually reinvest it. But that's a great passive kind of idea there. Let's do Hood. Yeah, I saw Hood. Let's do, Core Medics is an interesting one. So Robinhood stock, I do own this one. I'm up like 8x on Robinhood. So they've been actually my best performing stock, but I sold most of my position. But Robinhood deserves all the hype around them right now. They really do. Like they're a beast of a growth, like pure growth name. If we look at the revenue, it's up 100% after the revenue grew 36%, after grew 29%. So the revenue growth is insane, but look at the revenue specifically. The revenue is 1.27 billion. Out of this 1.27 billion of revenue, they netted 556 million. So that means their net margin is a 44%. These brokerages make these super high commission fees. And, they made this 556 million. This wasn't some one-time adjustment. That's after they paid 80 million of taxes. So Robinhood right now, whenever you go buy and sell a stock, they make about 0.1%. But whenever 0.1% of the total transaction, whenever you do this prediction market crap, which I don't really recommend you do because it's basically gaming, but they keep a 2% margin on it. That's where they're making a bulk of a commission right now. And it's the sole reason Robinhood stock has exploded. The day Robinhood CEO tweeted they did 6 billion of these prediction market contracts, the stock rocketed up 9%. That actually, it was this day right here, I think. Or maybe it's this day. Anyway, the prediction markets are making them so much money, and Webull is copying the successful business model. I love the picks and shovels plays of just this whole industry. You get exposure to crypto. Like Robinhood used to follow crypto and Bitcoin exactly because they made so much on crypto transaction fees, but now they've decoupled and gone even up more than Bitcoin because they're making money from prediction markets, margin, the Robinhood Gold subscription, and it's just crazy. So yeah, that's kind of why I like Robinhood. I own Robinhood, Webull, and Food. Do you see all these apps I'm on right now? These 3 apps right here, all 3 of these brokerages, they're all brokerages and they're all publicly traded. I own the stocks for all 3 of these apps right here. By the way, if you wanted to get any of these apps, they're all within my affiliate link. They're all in the link tree in my bio. This is my favorite app to buy stocks on. If you're looking to buy stocks, completely free, but very first link in the link tree in my bio. Let's see right here. Michael says SRBA. Let's look at some more of y'all stocks. Wait, SBRA. I can't find that one. Is this that bank stock? SRBA in the healthcare dividends. I tried to find that one. Do you think Reddit will get into the S&P 500 before VRT? I don't know. Probably. I think we were looking at the odds. VRT has a 71% chance of getting into the S&P 500 this year. The S&P 500 inclusion isn't. It's a nice short term. Oh yeah, and S&P 500 potential. I think the odds were like really high. Anyway, Vertiv's a nice data center cooling play. Do you have Robinhood Gold? I do have Robinhood Gold. That's the thing with Robinhood Gold. You have to pay them $5 a month, and you get a 3.25% APY. I do pay for it, but that's why I actually like Moomoo more. They don't have any monthly. There's no way to pay them monthly. They're just a brokerage where you get also a 3.35% APY on your idle cash, and all the features is Robinhood plus more features. So that's what's cool about this brokerage. It doesn't cost anything. You can buy crypto. There's no prediction market stuff on here either, which I do like. But yeah, this brokerage, Moomoo, it's in the link tree in my bio, first link there. So, okay. Better be putting money on the Panthers. SBRA Healthcare. Did I type SBRA? Oh, I typed it in wrong. So this is Sabra Healthcare REIT. So I like the hospital REITs. These don't outperform in the long run. Like this stock, SBRA, is the same price that it was in 2012. So the stock's been flat for a decade. But what you do get every year is a 6.22% dividend. So you basically gotten 6.2% of your money back every year with no stock price appreciation, maybe even a little bit of depreciation. So you're buying this to maximize your income and just get that 6% of your money back a year. The S&P grows at like 8 to 10%. So that's kind of like the hidden opportunity cost with REITs usually, even like a realty income. They just don't keep up with the S&P 500, but you get the maximized income. My favorite healthcare REIT, actually this one does keep up, is CTRE, Care Trust REIT. They have nice stock price appreciation, and they have 3.5% dividend. So a bit of a lower yield, but I think more growth. You get a 3.5% dividend, completely unleveraged REIT. I've never seen this. I don't even think any other REITs like this. I've looked at all the REITs out there. Like literally, I have a whole watch list. I used to be the REIT G. I used to own every freaking REIT. I've owned PCH, NSA, DLR, PSA, IRM, EXR, Cube. I've owned all these. I've owned Prologis. I've owned APLE. I used to love REITs, but I've moved my portfolio because I realized the hidden opportunity cost with these. You buy these when you need income. I've owned Vici, but yeah, this one's super impressive in terms of balance sheet, no leverage, and look at the top line growth. Revenues up 72, after grew 40. and they have a super safe dividend. Like these triple net lease REITs have crazy margins, 97% margins. You actually don't even look at net income. You really look at the AFFO, which is this number down here, because the net income doesn't include the depreciation, the amortization of these real estate assets, which are super important. You need to do that. So that's why you never look at net income when you value a REIT. You always look at really the AFFO. What app is this? It's amazing. Yeah, again, this is a brokerage. If you wanted to get it, it's in the link tree in my bio, very first link there. Broker called Moomoo, my favorite one. Okay, sorry. Yeah, I typed in the ticker wrong there. ONDS. Yeah, ONDS. Ooh, lithium. Yeah, my battery is dying. I know. We're good though. We're going to stream till my phone dies. We've been live for 2 hours and 50 minutes. This has been fun. If you wanted to follow mine, we actually stream every day. Probably going to end it kind of soon. But if you wanted to, the only way to support me, because I sell nothing, is subscribe to my YouTube channel. It's called Nathan Robert. Link tree in my bio. You can like rewind it or anything. But yeah, Ondas Holdings, this is a small cap that I can see why this momentum has been sustained, because there's still a lot of future growth expected. Now, I do think all that future growth is priced in, and I really wouldn't buy the stock today. But here's why I think this one's certainly interesting. As a super small, maybe swing trade, you don't want to put anything meaningful in these kind of smaller micro caps. But if we look at the revenue right now, it just hit a record 10 million. For the first time ever, it was $10 million. And check out what analysts are expecting in 2 quarters. They're expecting the revenue to go to 25 million, and they beat like crazy. They expected 7 mil. They did 10 mil this quarter. So they beat like crazy. So that if they do 25 mil, annualize that, it's 100 million of revenue a year. That starts to really change the outlook, because right now they're barely doing, 30 mil of revenue a year, and then to go to 100 mil. So there's just a lot of future growth expected. They're still not expected to make any net income. So they just fortified their balance sheet. Was that from stock issuance? So yeah, they did just dilute you by 400 mil, but look at this fortress balance sheet. Now, they have 450 mil of cash on hand and no debt at all. So they can easily afford to lose 7 to 15 mil a quarter for like freaking years to come, because they just fortified their balance sheet. So they're in a great financial position. Their EPS is, whenever they dilute you by a huge chunk like that, the EPS will never be the same, and it's harder to get EPS positive because you have to earn 30% more. But anyway, interesting name that I do like because of the future expectations. Hey, see ya, Plasma. Hope you're having a great day, great Saturday. GenMab, GMAB. And can we look at, what do you think about SpaceX? Hey, Frosty, yeah, good to see you again. I saw your comment earlier. We're finally back live. Yes, sir. What's cool about SpaceX is, Google owns 7.5% of SpaceX. That's like a little hidden fact about Google. They own 7.5% of SpaceX, and SpaceX is planning to go public at a $1.6 trillion valuation. You can literally look it up. Google has made one of the best investments of all time. It's like their second best behind YouTube. They bought YouTube for 19 bill. Now it does like 60 bill of net income a year. Like one of the best, like couple $1,000x return on YouTube investment, or I don't remember exactly, but they also bought SpaceX. They bought it for like 400 billion, their stake. Now their stake, I don't remember it, but Google has an insane. Anyway, SpaceX is trying to IPO at 1.6 trillion valuation. If they do IPO at that valuation, a crazy return. So let's do GMAB. Okay. ARR is a winner REIT. Hey, I think that's like a mortgage REIT, more like a lender. Got in at 3 for Ondas. Hey, wait, isn't it like $8? You're up like crazy, right? Hey, what up, Moon stocks? So actually, yeah, this will probably be the last one or so. And then we'll do a portfolio update. But here's GenMab stock. They're a $21 billion company. And let's go see what they do. I haven't heard of this stock before. So, it looks like they sell a bunch of different prescriptions. So this prescription is Darzalex. How's that growing? So that grew 17% after it grew 26%. So that's seen some nice growth. And then they have whatever that one is. That one's up 45% year over year after 65. Net product sales is up 48%. So actually, when we blend all those metrics together, the total revenue grew 25%, $1 billion for the first time ever. On that $1 billion, they netted, sorry, my thing just reset. They have a 40% net margin then. Yeah, that's insane. So the revenue was $1 billion in the net income, after paying taxes, after they paid, the 60 mil of taxes, they netted 400 mil. So they really did have a 39% net margin, and they have a fortress balance sheet. Let's see, $3.4 billion of cash And a lot of that is in short-term investments, so I bet they're printing interest. Oh my goodness. They made 29 mil of interest just on their cash this quarter. Like if this number was negative, that means they have debt and they're paying negative interest on their debt, but this is positive, which means they're net making interest every quarter on their cash. And I don't think they pay a dividend. Are they doing share buybacks? They're doing share buybacks. They did 400 mil of buybacks last quarter. So I love this one. Wait, what was the market cap? 21 billion. And remember, they had over 2.1 billion of cash. What was it? So over 15% of this company's market cap is just their cash on hand with 40% margins. Pretty good double-digit 20% growth on these high-margin prescriptions. Anyway, so look at that, though. 92% of the revenue comes from Denmark. That's where all their sales come from. So the US is only 4% of the sales. But if you're looking for like a Denmark prescription play with 40% margins, cheap 22 PE, maybe check out GMAB. No complaints there. I see why they're at a 52-week high. So yeah, let me end this with a quick portfolio update. Then I'll get out of y'all's hair. We've been streaming for 2 hours and 59 minutes. And I've enjoyed it. So if y'all want to hit the follow button, we stream every day. So here is my 3 different portfolios. We'll start with Webull here. This is like my risk on portfolio. We're only up 19% all time. So we've definitely underperformed in the long run. But here are my stocks by total equity. My largest holdings are at the top, like Futu, AMD, Disney, Reddit, Progressive, Sprouts Farmers Market's been a big loser. My newest position is AbbVie. If you're looking for another prescription stock, they own Skyrizi. They're just like the American version of that stock we just looked at. Check out AbbVie. I just bought them for the first time ever, literally days ago. They have a 3.2% dividend. So if you'd like a higher yielding name, this one has a 3% dividend, and I think will also give you 3% stock price appreciation a year. I got SoFi, Robinhood, some of these smaller names as well. So yeah, that's our Webull portfolio. I kind of just do whatever I want in there. But in this portfolio, this is known as our buy, never sell account, where once we buy a stock in here, I never sell it. So you can come back to my stream in like a year or my YouTube channel in a year and we'll still own all these exact same stocks. And that's the reason we've done so good in this portfolio. Like year to date, or exactly from a year ago, we're up 95%. Oh, there's a 2 year. How about from 2 years ago? 2 years ago, we're up 157% versus the S&P up 56 or NASDAQ up 59. That's because we didn't sell before today. We let our winners win. Like in Comfort Systems, most people, maybe when they're up double so quickly, they trim it. But in this portfolio, and it hasn't bitten us yet, we're just not going to sell anything. We're just going to diamond hand everything in here. And it's had great results so far. So yeah, like Amphenol is another stock we bought during the dip, April dip, and Amazon too. So yeah, and then finally we have our Webull our Robinhood portfolio, known as our dividend-only account. And year to date, we're already up 4.4%. And every stock in here, of course, pays a dividend, but most of these are dividend growth companies. Here's my dividend or total percent change on every stock, not including dividends. Like we're up 103% on Google. Like obviously Google pays a dividend, but you're buying them for the stock price appreciation. McDonald's, CEG, United Rentals has been crazy year to date. They're already up 15% year to date. These are probably stocks you haven't heard of before, but Carlisle's up 10%. But it's like the Mag 7 that's kind of been struggling. The Mag 7 ex Google, Amazon. And then we have a Roth IRA. Yeah, we haven't looked at this yet. Our Roth IRA is just a tax-free retirement account. We started this exactly a year ago, and our largest holding is HCA Healthcare, one of my favorite stocks of all time. Favorite healthcare stock. We're only at 1.5. The other stock that's done surprisingly well is Cavco, debt-free Cavco that buys back 5% of the stock a year, that has a 300 mil backlog. They make factory-built housing. And I want to make a video on that one eventually. But anyway, that was the stream. I hope you guys have a great rest of your day. Hit the follow button if you want. And the only way to support me, I sell nothing. I have no course book, WhatsApp, Telegram. I'll never follow you, DM you. I don't coach, nothing like that. The only way to support me if you wanted to is subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. You can just type into YouTube, Nathan Robert. Because yeah, we get most of our viewers on TikTok, but I'm also streaming on YouTube. If you miss anything, you can like rewind it and stuff. But yeah, and if you leave a comment on the stream, you can say like, hey, can you look at this stock at the beginning of the next stream? We'll look at like your stock if you leave a comment at the very beginning of the next stream. Anyway, sorry for rambling. Hope you guys have a great rest of your day. Thank you so much for being here. And thank you especially to everyone on the YouTube stream, like Brian Paul, all the members. And there was Cruz in here that left a super chat, and Maddie. I can't believe that. Thank you all so much. If you haven't already, hit the like button on the stream. It does help me out. But anyway, see you soon. We'll be live tomorrow. We're doing 2 streams tomorrow. 2